applauded because it increases our ability to respond quickly to any new threats. And that's what we did. On the very day the World Health Organization identified the new variant, I took an immediate step to restrict travel from the countries in Southern Africa. But while we know that travel restrictions can slow the spread of Omicron, they cannot prevent it. But it does give us a little more time to take more precautions at home to prepare. A month ago, we announced requirements that foreign travelers must be vaccinated if entering the United States. This week, I announced an additional action to strengthen international travel rules to give us more time to stop the spread and study a new variant. It used to be that international travelers flying to the United States had to test negatively 3 days before their departure from that country. Well, I'm announcing today that all inbound international travelers must test within 1 day of departure, regardless of their vaccination status or nationality. This tighter testing timetable provides an added degree of protection as scientists continue to study the Omicron variant. And we are extending the requirement, both internationally and domestically, to wear masks for travel on aircraft, trains, public transportation through the winter months. I'll close with this. Again, the actions I'm announcing are ones that all Americans can rally behind and should unite us in the fight against COVID-19. And they come from a position of strength. We are better positioned than we were a year ago to fight COVID-19. Since day one of my administration, we've been doing everything we can to beat this virus. And that's what we have to keep doing. That's how we keep our country and our businesses and our schools open. And that's how, even with the pandemic, we've generated record job creation, 5.6 million new jobs since January 20th, more than any president in American history. We're on the track to the fastest economic growth in 4 decades. In 4 decades. We move forward in the face of COVID-19 and the Delta variant. And we'll move forward in the face of Omicron variant as well. And we'll do it by keeping the faith and doing it together as the United States of America. Let me close again by saying God bless our doctors, our scientists, and all of you here at NIH for what you're doing for the country and, quite frankly, for the world. You're the best. You're the very, very best. And God bless you all. Thank you for your patience in listening to me. Thank you.
President Biden there making an update, his latest measures when it comes to quelling the pandemic that's really dogged his presidency. 5 months after President Biden declared the U.S. to be on the verge of defeating COVID-19, the virus threatening a winter resurgence across the country.
The president saying that private insurers must pay for at-home tests starting in January. The president also saying that the CDC is reviewing test-to-stay policies for classrooms so more kids can learn, even if somebody in the classroom has been exposed or tested positive.
President Biden from the NIH, of course, that's been our go-to place when it comes to all things COVID here in the U.S. All right, we'll continue to track and talk about and assess the impact. In the meantime, let's get a check on that trading day and your top business stories. Charlie, looks like we're near or just off our highs here.
Exactly. Green on the screen, Carol and Tim, and here's where we stand. Right to the numbers, we'll give you the wide. We've got some big numbers today with the S&P up 71 right now, rebounding from yesterday's decline, up now by 1.6%. The Dow up 672 points, up by 2%. NASDAQ higher now by 119 points, up by 0.8%. Dip buyers come in. It is a risk-on day. Treasuries decline. The 10-year down 14.30 seconds with the 10-year yield right now 1.45%. As for the interest rate outlook, Subhadra Rajappa is head of U.S. rate strategy at Societe Generale.
If you look at the bond market and you try to extrapolate sort of the path of where 10-year yields could be a year from now, it's saying it could be anywhere between 270 on the upside and 1% on the downside. So there's an extremely wide band of probabilities of where things could go from here on. And I think that investors, broadly speaking, are very cautious.
And again, we do have the 10-year at 1.45%. Spot gold down 0.9%, tumbling $16 the ounce to $17.65. West Texas Intermediate crude up 0.8%, $66.12 a barrel on WTI. Apple lower by 0.7%. Apple dropping after the iPhone maker was said to tell suppliers that demand for its flagship product has slowed, taking the shine off their recent records. And China said to be on the cusp of lifting an almost 3-year grounding of Boeing's 737 MAX jet. Boeing shares flying higher today by 5.9%. Recapping, stocks are rallying with the S&P up 70, up 1.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Businessweek. It's Thursday, December 2nd, 2021. Carol Master along with Tim Stenovic in our Interactive Broker studio. We are also streaming on YouTube. Got a lot of stuff coming up. We're going to get back to the markets in just a moment. We've got Apple, though, another problem for them. And this time, Tim, it looks like a demand problem. We're seeing the stock move on that news.
Yeah, it was down as much as more than 4% earlier in the day, but bouncing off those lows. We're also, check your calendar, because it is the 20th anniversary of Enron. Remember that?
Do you remember that?
I actually do remember, yeah.
Creedy, do you remember that? All right. We're going to bring...
Sorry. I promise.
We're also going to talk about Goldman Sachs' top bosses pushing for new ways to juice their own pay. It's the most read on the Bloomberg. We're going to talk about Cadillacs and EVs. We're going to talk about SPACs. And we're going to talk about getting your Christmas tree. All right, let's get to the Market Drivers Report. Let's set that Business Week agenda. Creedy, who knows nothing about Enron?
I've read about it.
All right. Creedy is with us, tracking the markets. She's Bloomberg Markets correspondent, and Mike knows lots about the economy. Was here for the Enron scandal.
Yeah, let's not mention how old we are here.
We were babies playing around in our sandbox, talking about Ken Lay and Mike tracking the economy for us. He's Bloomberg News International Economics and Policy correspondent. First of all, Creedy, let's talk about the market trade. Feels like no problems out there.
You know, what's interesting is that on the surface it looks like that, but we're coming off just so much volatility, and it's still not enough to really reverse what you've seen in the past couple of sessions. So if you look since Friday, you are still net negative from a percentage point of view. Even if you did buy the dip, you have lost that money in the last 5 sessions. So this isn't necessarily good news in that perspective, but you are seeing a little bit of calm markets. A lot of this is going to be positioning for payrolls tomorrow, and that's really what you have to know.
All right, speaking of payrolls tomorrow, Michael McKee, come on in. Let's talk about this. 546,000 is what economists surveyed by Bloomberg are expecting. What happens if it's higher? What happens if it's lower?
Oh, if it's higher, then everybody celebrates and they open the champagne at the Fed. If it's significantly lower, then they got a problem, because they've all but told us they're going to go ahead and speed the taper because they're worried about inflation. And all of a sudden, if the economy looks weak, but there's no indication that's going to happen at this point. All of the numbers that people use to try to guesstimate what the total number of jobs created, or in this case, jobs restored, is suggests that it should be good. They also want to see a drop in unemployment continue, and they want to see the participation rate go up. And if these things happen, then it's sort of like a checklist for them. We want to taper. Jobs report's okay, check.
But wait a minute. Is this going to be, help me out here, you know this, is it jobs measured through the midpoint of November? Is it before Omicron kind of starts freaking us out?
It's definitely before
Okay.
Omi.
I know.
Whatever.
Potato.
That one.
But right, it's
but
before that.
it's the week that the pay period that includes the 12th of the month. They say pay period because some people get paid weekly, some people get paid bi-weekly, and
okay.
So it's basically 2 weeks old data at least.
Okay, so something to think about. Markets, disappointment or a beat to the upside, Creedy? I mean, what kind of market reaction could we see?
It could go,
and the bond markets are really important,
right?
To
and
watch.
it could go either way. To your point, if the Fed does pop the champagne on a really good payrolls number, does that mean the rest of the market sells off? Which is what we saw during the testimony when he was talking about when Chairman Powell said, well, tapering could be at a faster pace, and also saying that, well, we ought to retire the word transitory. Essentially, inflation is on their radar officially and on the record. Markets might not like that.
Yeah, the thing is that we're going to have inflation going forward no matter what this new variant does,
right,
because it could lead to greater inflation if it interrupts supply chains.
Mm-hmm.
It could be less if the economy tanks, but it's going to take a while for that to happen. So inflation is a problem for the Fed going forward.
But it's worth mentioning also that for a while, every time the Fed would come out and kind of I don't want to say deny, but kind of sidestep the inflation question, saying it's transitory. The markets will sell off on that too. So I wonder if the acknowledgement of the fact that there is inflation, that they are going to address it, is actually positive. And I don't have the answer to that, but that's something to watch for.
Mike, do we get a new word after transitory that we can all obsess about?
I don't know.
Okay.
I think they regretted that one, and so maybe they'll.
They'll give us something.
We've already proven that Omicron is the obsessive word of the moment for everybody.
All right, we got to run. Mike, thank you so much. Michael McKee, international economics and policy correspondent, Bloomberg News. Kriti Gupta, she's going to be back a little bit later on. We're going to talk about the chart of the day. In the meantime, bite of the day.
The Bloomberg Businessweek Bite of the Day is one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Today's number, it is 18. I love this story. Teen truckers, they are here. Get ready for youthful-looking drivers at the wheel of big rigs, as President Biden's new infrastructure law will let some drivers as young as 18 make interstate trips. That's young.
Especially young, because in some states, that's the age for actually getting your license, right?
I think
Is that right?
Yeah. Yeah. Well, yeah. Yeah. It's still young.
It is young.
The move aimed at easing the supply chain squeeze. It's also raising safety concerns. The pilot program came at urging of the industry, which says it's 80,000 drivers short of, or it is 80,000 drivers short of where it needs to be. We've been talking about this.
You can drive a truck, but you can't rent a car or grab a beer.
Supply chain problems.
I know.
Look at what's happening there. All right, let's get to world and national news.
Nancy Lyons standing by in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden says the administration is implementing a 5-point plan to deal with an expected surge of the coronavirus this winter. It includes an expanded booster campaign and free at-home tests.
I know COVID-19 has been very divisive in this country. It's become a political issue, which is a sad, sad commentary. It shouldn't be, but it has been. Now, as we move into the winter and face the challenges of this new variant, this is a moment we can put the divisiveness behind us, I hope.
Biden's plan comes as we learn of another case of the Omicron variant in the U.S., the second so far. Today, Minnesota officials announced the variant had been found in a resident who'd recently traveled to New York City. The first Omicron case was announced yesterday in a San Francisco resident who'd recently traveled to South Africa. Secretary of State Antony Blinken says during a 30-minute discussion today, he pushed Russian Foreign Minister Sergei Lavrov to choose diplomacy rather than aggression when it comes to Ukraine. Bloomberg's Irv Chapman reports.
Blinken said he made clear American determination to step up sanctions against Russia with no need to specify what that would entail.
Moscow knows very well the universe of what's possible and the concerns that we have, and these include both the potential for renewed aggression with military forces, as well as some of the efforts that we see Russia taking to try to destabilize Ukraine from within.
Blinken said Presidents Biden and Putin would likely have a conversation by phone or video to de-escalate the Russian threat to Ukraine, whose independence has strong U.S. and allied support. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now back to you, Carol and Tim.
All right, Nance, thank you so much. So we just heard from the president detailing the latest upbeat on what the U.S. wants to do in terms of really combating this latest variant when it comes to COVID-19. In the meantime, we do have our second reported case in the U.S. Pfizer expecting its vaccine to hold up against the Omicron variant. An executive coming out with that. Germany imposing stringent nationwide restrictions on people who are not vaccinated. So that's a little bit of our world snapshot.
We're also seeing that even though Omicron is stealing a lot of the attention, the Delta variant is still pressuring the U.S. healthcare system. So it comes at a time where hospitalizations are rising in 39 states, Carol.
All right, so let's get to our guest, Dr. Emily Gurley, Associate Scientist at Johns Hopkins University, Bloomberg School of Public Health, which is, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. She joins us on the phone from Baltimore. Great to have you here with us, Dr. Gurley. The latest Omicron variant, what are some of the conversations you guys are having at Johns Hopkins about this?
Well, there are conversations about the scientific questions around where this variant came from and what the mutations that we observe in this variant might mean. And then there are conversations about the public health impact, which are related to the scientific questions, but are a bit different. And in terms of public health impact, we're really in a wait and see mode because we don't know key answers to key questions like, is this virus more transmissible? Is it able to evade our immune responses? Could it lead to more severe disease? And it may be weeks, actually, before we have good answers to those questions.
Well, let's ask the question a different way. What do we know?
Well, we know that the Omicron variant has many more mutations than we would expect to see from a virus that evolved from one of the existing more common variants. So we expect viruses to change over time. That's normal. But this virus has many more mutations. So it looks a lot different than the other variants that are currently circulating. And so we don't know how it came to be, but we do know that it looks different.
So many more mutations, is that worrisome? Like, give us some idea for those of us who are not as smart as you, basically.
Oh, no. Well, I mean, but that's the question. What does it mean? I don't think we fully understand what it means from a public health perspective. We generally are not smart enough to be able to look at genetic mutations and say, oh, if a virus has this, this, and this, it is going to do this. We know. We can say, because of where the mutations are on the virus, there are many around the spike protein, and the spike is what connects to our cells so the virus can replicate, and the spike is what our antibodies target, right? So if we have antibodies to a spike protein of previous variants, they may not bind as well to this virus because it has some mutations there. It looks a little bit different to our immune system.
Dr. Gurley,
so, yeah, go ahead.
I think for our audience, a question that I've been talking about with friends is, what should we be doing? How should we change our behavior, if at all?
I think that, I mean, first of all, the variant that's transmitted most commonly in the U.S. right now, and it's causing all these hospitalizations and deaths, is the Delta variant. So don't forget about Delta. We expect that all of our interventions that we use now for Delta are the same. They're still the best tools that we'll have for Omicron as well. So get vaccinated, get a booster if you're eligible. Be aware of what's happening around you. So if there's a lot of transmission happening in your community, get the mask out. You've got to be aware of what's happening around you. If you've been exposed, test yourself, even if you've been vaccinated, because we know that if you are infected, even after vaccination, you can transmit to other people.
Well, I have a question for you. So,
sure.
Tim got his booster. I hope I can say that.
Yeah, say it.
I'm about to get my booster. I'm about to get my booster. So what if then all of a sudden they come out in a couple of weeks and they're like, okay, that booster's going to do nothing for you. And then, I don't know, what does that mean for our safety and our health? Again, I guess it depends on how lethal it is, right? And how contagious it is. I guess we have to answer those questions. But then if they come out with another booster in 3 months that does deal with this new variant, will be safe to go ahead and get that again? Like, we can just continue to keep getting boosters and the stuff being, basically being shot again?
So there's a lot of speculation there.
I know. But you know what I'm getting at, like this idea of getting multiple vaccines over and over and maybe getting them closer and closer to one another. Do we need to be concerned about that?
I really doubt it.
Okay.
But let's be clear about what the vaccines really are meant to do. And I think this message does get confused. What we're trying to do is prevent hospitalizations and deaths. That's the primary goal for COVID control and to end the pandemic. Because, imagine we were having a pandemic that only caused mild disease, right? So you get an infection, you don't feel well for a few days, but then you recover and you're fine. No rush to the hospital, no increase in risk of death. We would not upend our world for a pandemic like that, right?
Right.
So what we have to try to do as much as we can is get COVID to look like that, right? So that we're reducing at every stage, risk of hospitalization, risk of death. Vaccines are the very best way to do that. Even in studies that show, that vaccines can wane over time and their ability to prevent infection, they still retain their ability to prevent hospitalization and death. Okay. And that's really what we have to keep our eyes on here, I think. So those vaccines are the best way to do that. There's no reason to believe that Omicron is going to change that calculation. And we also have to, think about, treatment. If you're at high risk, you need to be, you need to be watching yourself. Get some home rapid tests.
Yes. Okay. That's what I want to talk about with you. I want to talk about the home rapid test because we just heard from President Biden that he wants private insurers to pay for these at-home rapid tests. These are antigen tests. They're not PCR tests, correct?
That's correct.
Okay. What is the accuracy of an at-home rapid test versus a PCR test?
So they can be less accurate, but it depends on the situation, right? So let's imagine that you've been exposed and you have symptoms and your rapid test is positive. You probably have COVID. The chances that you don't have COVID are very low, okay? Let's imagine that you haven't been exposed, you don't have symptoms, and you get a positive test. Well, maybe yes, maybe no, right? Maybe you take a second test to figure that out, or to get another data point.
Right.
So I think when we say these tests aren't as accurate, we're selling them short because there are many situations where they are definitely accurate enough to take action.
My question is because as we get closer and closer to the holidays, and I saw this certainly with friends and family before the Thanksgiving holiday, people go and they get a bunch of Binax Now tests from the drugstore. They all take them. They are all negative, and they go and have Thanksgiving or Christmas or Hanukkah with one another. Is that okay to do because these tests are accurate enough to tell us if we don't have symptoms and we don't have COVID?
They are great for that reason.
Great.
So we should be using them. We should be using them all the time. The test result that's difficult to figure out is if you don't have symptoms and it's positive, it may be a false positive. That's possible, but if you're going to err on the conservative side, maybe you just sit that, don't go into that party until you can get a PCR test and get it confirmed. But if you're symptomatic and it's positive, you should stay away. I think these tests get a bad rap for no good reason. Remember what they're trying to do. So a PCR test is better in the sense that it can pick up the virus sooner in your system, right? So that's an advantage. But the antigen tests are much better at telling us whether or not you're infectious, whether or not you have a lot of virus in your nose and are likely to infect someone else. So from a public health perspective, from a transmission perspective, those antigen tests are great because that's really what you want to know. If I go somewhere, is there a chance that I can infect somebody else, right? And the antigen tests are great for that. They're fast, right? Speed means so much in terms of transmission. So just for an example, if you got a swab collected today and you got your PCR results back tomorrow, that's very quick. But that PCR result tells you about your infection status yesterday, not today.
Right.
And to be able to act on data, you need rapid tests, and the antigen tests are great for helping you determine whether or not you're infectious.
Covered a lot of ground. Good stuff. Dr. Emily Gurley, thank you so much. Epidemiologist over at Johns Hopkins University, Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropy. She's joining us on the phone from Baltimore. Really good questions. I know you've been thinking a lot about the testing.
Really helpful clarification with these tests because there's a lot of people have a lot of confusion around how accurate they are.
Exactly. All right, stick around, folks. We're going to talk a little bit about Apple. The stock movement today will tell you why and why it's selling off a little bit. This is Bloomberg Radio.
Connection lost.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Businessweek.
All right, so I did say Apple shares were down. Forgive me, because they were down about, well, at their low,
They're
we're down more than 4%.
They're still down.
Yeah, they are.
But look at the whole market; it's higher.
Right, exactly. They've bounced off, and it had to do with maybe slowing demand.
Yeah, not only that, but suppliers getting hit as well. Cirrus Logic shares lower too.
All right, so we're going to talk about that with our guru, all things Apple. We go to Mark Gurman. He'll join us in just a moment.
In the meantime, a check of what is going on with this trading day. Here's Charlie Pellet.
In a word, we are higher across the board, Tim and Carol. We've got the Dow, the S&P, NASDAQ all rallying. This update brought to you by SEI. Imagine your asset management firm's operational infrastructure as a competitive advantage. Let SEI show you how at SEIC.com/IMS. The Dow, the S&P, NASDAQ all advancing after the biggest back-to-back sell-off since October 2020. Dip buyers scooping up some of the hardest hit shares. Risk on today. Treasuries retreating. We've got the 10-year down 15-30 seconds. 10-year yield right now 1.45%. S&P up 76, up 1.7%. The Dow up 702 right now, up 702 points, up 2.1%. NASDAQ up 141, up by 0.9%. But as you guys have been mentioning, Apple trading lower by just about 0.7%. Spot gold down 0.9%, down 15.80 the ounce at 17.65. West Texas Intermediate crude oil right now is advancing by 2%. WTI of $1.30 a barrel, 66.88 on WTI. A Minnesota resident who was recently in New York City for a large convention has tested positive for the Omicron variant of COVID-19. Mayor de Blasio says we should assume there is a community spread of the variant in our city. South Africa's government is resorting to cash incentives to counter widespread vaccine hesitancy and apathy. Health experts, meanwhile, are monitoring the variant carefully and what it means for hospitalizations. Dr. Chris Beyer is professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health.
The good news is that, at least for the preliminary data we've seen so far, which the South Africans have been great about sharing, I must say, is that people who are fully immunized appear not to be going to the hospital. But it's early days, so we're going to have to follow that. We're going to have to see, as we've all seen over the last year and a half, the waves of hospitalization and severe disease have a time lag from when these variants start circulating.
Dr. Chris Beyer with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track every day at this time, Pfizer down 1.9%. ADRs of its German partner BioNTech, they are down 1.5%. AstraZeneca's ADRs up 0.2%. Moderna down now by 3%. Johnson & Johnson is down 0.7%. Again, recapping 10-year yield 1.45%, S&P up 76, up 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As we mentioned, we have been watching shares of Apple, seeing some selling earlier on, definitely bouncing off their lows, but still a bit lower. What the concern seems to be is we know that there's been supply chain issues, but now we're looking at maybe some demand issues, Tim.
Yeah, well, fortunately, Mark Gurman is the guy to talk to when it comes to all things Apple. He's technology reporter for Bloomberg News. He joins us right now from the Los Angeles Bureau. So you folks on YouTube who are watching and listening right now can see him as well. Mark, what is going on with the demand story here? Because this is part of a much larger narrative that we've heard about over the last few weeks, thanks to your reporting and our colleagues as well.
As you know, the iPhone 13 is really a modest upgrade over the iPhone 12, and that was ignored for the first several weeks of this product's launch because there was such supply chain problems with this device alongside everything else because of the chip shortage. We saw 1 month delays, right? And those 1 month delays sort of indicated really strong demand. But we know that that is starting to sort of ease, and we know that people are not looking to buy the iPhone 13 in quantities like they were wanting to buy the iPhone 13 weeks ago, probably because it's a modest. Is that the carriers and Apple had extraordinarily aggressive rebate offers for the iPhone 13 out of the gate. the amount of how lucrative those deals are have now subsided now that the phone has been out for several months as well now, right? So that all indicates why it would be weakening. People are waiting for the iPhone 14. They're waiting for bigger changes next year. They might be waiting for a new iPhone SE next year.
Can I just tell you, all right, I'm not going to say who it is, but there has been a carrier, my carrier, sorry, has been bombarding me saying, like, if you get a new phone, I just bought a new phone in the last year. They're like, if you buy a new phone, we're going to give you this amount of money. I mean, it has been nonstop, Mark.
Well, they're doing that because they know that they need rebates and discounts in these special deals in order to move these devices, right? If you bought an iPhone 12 last year, there's basically no reason to upgrade to the iPhone 13. Yeah. So why did I do it, right? I have the iPhone 13 Pro Max here. I had the 12 Pro Max last year. Why? I got it for free. Really, I swear, I got it for free. That's how aggressive the deals were at the early offing of these new iPhones. They gave you $1,300 basically for a 12 Pro Max last year. Other devices got big discounts too, right? That's why these phones were flying off the shelves, because of those carrier deals. Yeah. There are some cool, nifty features, the new camera technology, the portrait mode, the cinema mode for video, the new Sierra blue color, which I think is kind of cool. But other than that, yeah, that's the one. But other than that, these are not significant upgrades. But don't forget, there's also people with older phones.
Mark knows this already, because one great thing about working with Mark Gurman is you can email him and say, hey, Mark, what phone should I get? And he'll email you back. And I'm so grateful he did that, because there's nobody else who knows more about phones than Mark. Mark, but here's the thing. I upgraded from an iPhone 10. So there was a huge reason for me to buy this 13 Pro that I just got, and it's night and day, especially with the apps that I use. Isn't that who this phone is geared toward? Not necessarily to people who have the 12, like Carol?
That's right. Apple doesn't design and develop new products to be released on an annual basis to get the people from last year to upgrade, right? It's about people new to the ecosystem. It's about people new to the iPhone. It's about people who are upgrading from older phones like yourself, right? But at the same time, we've seen consumer spending, right, decrease as consumer prices have gone up. Gas prices are going up. People are concerned about, food prices and potential food shortages. There are some concerns, obviously Omicron and COVID as well, right? And those are reasons why demand could be weakening. The one thing I'll note is I think this is, a blip, not a trend for Apple. I think you'll see stronger sales next year. I think the iPhone 14 is going to be obviously a smash hit. And the one thing I will say is that Apple has said that its quarter revenue for Q1 is going to be a grand slam, basically. They're going to top 112 billion, which was what they reported last year in the first quarter. So regardless of this demand weakening, it's going to be an extraordinarily strong quarter. Perhaps just not as strong as some had been anticipating or Apple would have liked, not only because of supply, but a combination of supply and demand.
I mean, I always feel like when we're talking Apple, it's like the law of large numbers. I mean, it blows my mind. Hey, Mark Gurman, thank you so much. Mark is technology reporter joining us, and you could have seen him on YouTube from our LA bureau. I love talking with Mark.
I do too. Get him back again.
What color is your phone?
I got the Sierra Blue one that Mark was
really
talking
cool?
about. Yeah, it's cool. I'll show it to you. In the meantime, let's get a check the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. President Biden is calling on health providers to expand the availability of coronavirus vaccines and booster shots in hopes of tamping down a possible winter surge of infections and to hold off the new Omicron variant. He outlined a new strategy during a visit to the National Institutes of Health, saying it's time for everyone to pull together.
This is a moment we can do what we haven't been able to do enough of through this whole pandemic. Get the nation to come together. Unite the nation in a common purpose.
Biden's plan also calls for free at-home tests with costs to be covered by insurance companies. Pressure is growing on a former Trump administration official to testify before the January 6th Select Committee investigating the Capitol insurrection. Jeffrey Clark was an assistant attorney general at the time who allegedly offered to help the former president block certification of last year's election. He's now facing a contempt of Congress resolution for refusing to provide documents and answer questions. Congresswoman Liz Cheney is the top Republican on the Select Committee.
We are a nation of laws, and our Justice Department has a solemn obligation to truth and to justice.
Cheney says it's important to consider what would have happened if Clark followed through on Trump's request to block certification of the election. The fate of abortion now rests in the hands of the Supreme Court after arguments yesterday concerning a Mississippi law that bans abortions after 15 weeks of pregnancy. A new Yahoo News YouGov poll finds fewer than 1 in 4 Americans wants the court to overturn Roe v. Wade. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Carol Masser along with Tim Stenovic here in our Interactive Broker studio. We've been talking iPhones behind the scenes.
Yeah, we have.
It is so funny. Like I obsess too about my color. I'll be like to my husband, which color should I get my daughter? And once you put a cover on, they all look alike.
Well, that's what I was saying, and it just doesn't matter what color I get because I put these cases on that are meant for people who drop their phones all the time, like myself. Because you spend so much money on one of these things.
It's so true.
You don't want it to break.
For the first time in forever, I actually dropped my phone out of a case last summer, was it? And just cracked the screen.
There it is. There's $300 right there.
Hey, one story I want to just bring to your attention has to do with Goldman. Goldman Sachs' fund management unit saying it will oppose corporate boards that lack at least one candidate from an underrepresented minority group, while saying it expects public companies to have at least 2 female directors. So I guess we're talking about Goldman Sachs Asset Management.
Yeah, it said the company said that starting in March, it will vote against boards for companies in the S&P 500 and the FTSE 100 that don't meet its diversity goals. This is according to a statement on Thursday.
Right. Goldman Sachs Asset Management already has a policy of voting against companies in the U.S. that do not include any women. These are the kind of things I feel like the actions, the metrics, because you can easily measure who's on a board, right? And you can see a lack of diversity. And so when we talk about ESG metrics, in particular being measurable, these are the kind of things that can certainly make a difference in terms of who gets investments, who doesn't, right?
You can, and we're also seeing different states take different types of actions. California, for example, has rules in place to make sure that there is a certain amount of diversity on corporate boards.
And I think about all the conversations that we have. We have so many ESG conversations. We know there's tons of money flowing into this space, but again, there's a lack of transparency. And so what are the metrics that help you really determine whether or not when you make an ESG investment, are you really getting the ESG components that you're investing in? And things like this can certainly take a big step towards that, right? All right, you're listening to Bloomberg Businessweek. We're going to talk more about Goldman, another story on Goldman that is our most read on the Bloomberg. That's coming up in about 30 minutes.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all rallying, stocks heading for their biggest surge since October. Dip buyers scooping up some of the hardest hit shares in a two-day sell-off. Right now, the S&P is up 71, up by 1.6%. 2% jump right now for the Dow, being led higher by Boeing. Boeing shares up 6.5%. The Dow up 683 points, up again by 2%. NASDAQ up 122, up by 0.8%. Apple, a stock we were talking about, down 0.8%, 163.43. 10-year yield down at 1.45%. 10-year down 14.30 seconds. Spot gold down 0.9, 17.65 the ounce. West Texas Intermediate crude up 2.5%, 67.21 a barrel. After earnings, Snowflake shares surging 12.8%, CrowdStrike up by 3.5%, and we cannot ignore Signet, that is the owner of Kay Jewelers and Zales. It reported quarterly revenue this morning that exceeded the highest estimate. Right now, we do have shares of Signet, SIG, trading lower, down by 4.4%. And that's a Bloomberg Business Flash.
All right, at one time, Enron was a prominent energy supplier, a trading powerhouse named financial vehicles after Star Wars characters and themes. We all followed it. We wanted to talk to its top executives, and it had a stock that went from a high of 90 in August of 2000 to below $1 in November of 2001 as it all unraveled in a massive fraud. Today, Tim, is the 20-year anniversary of the Enron bankruptcy.
Greg Farrell is investigative reporter for a legal enforcement team here at Bloomberg News. He's with us in the Bloomberg Interactive Brokers studio. Greg's story is featured in the new issue of Bloomberg Businessweek magazines. It's available on newsstands and at Bloomberg.com/Businessweek. So take us back 20 years ago, where you were, Greg. You were a reporter at USA Today, following it, right?
Yes, I was at USA Today. And in fact, because of 9/11, I'd been over in Europe for a while, spelling some of our foreign correspondents just in Germany and in England. So I remember the date of the bankruptcy, having a drink in a bar in Frankfurt with an ex-Goldman Sachs guy who was just starting his own fund. And I wasn't following Enron because I was over there for something else, the Afghan peace talks or something. And but this guy was like, I can't believe this happened. This was just such a stunning event that Enron, which was such a high flyer for so many years, and crashed and burned in record time. So as soon as I got back, I was put on this, and it started with congressional hearings, and then of course the the very quick criminal charge that the Justice Department leveled against Arthur Andersen.
Well, speaking of crashing and burning, right? These were the accounting firms, and yes. Arthur Andersen in particular. What came to be known as a result of the investigations?
Well, first of all, it came out very quickly that Andersen had engaged in a frenzy of paper shredding, at the time in October of 2001, that it was clear that a massive loss was going to be reported, and it was clear that there was going to be at least an SEC investigation, if not worse. So that was a very bad fact. Then Joe Berardino, the CEO at the time and the last CEO of Arthur Andersen, he testified in Congress in December that he thought that they'd been, Arthur Andersen had been lied to. At least that was the defense he put forward.
By Enron?
Yes, that Enron had lied to Arthur Andersen. He was trying to protect the auditing firm.
What's interesting about this story is it really gets to the relationship between a firm and its accounting firm, and you really get into what are the responsibilities or the relationships, because those accounting firms, which seem so dry and boring, they'd also become consultants.
Yes.
Right. So they're really woven in with these companies.
Yes,
and
absolutely.
That provides maybe potential for conflict.
That was a big problem at that time. It was such a big deal that the then chairman of the SEC, Arthur Levitt, had proposed a rule in the year 2000.
A Bloomberg board member, I believe.
Yes, absolutely. And he had proposed a rule in the year 2000 that auditing firms should keep their, should not serve also as business consultants to their clients, because that could, basically expose them to leverage. And this is what we saw, classically with Enron and Arthur Andersen. Andersen, it was their most profitable client. They got more than $50 million a year in 2000, and they passed the 50 million mark just through October of 2001 before, Enron went down. And it was clear that that amount of money had clouded, and basically they had co-opted adopted the Houston office of Arthur Andersen.
Okay, but you do write in the wake of this, 3 of the big 4 accounting firms sold off their consulting units. But that was then, this is now, and over the last decade, firms have reversed course, acquiring consulting firms to expand their revenue sources, once again, building conflicts of interest into the system.
Memories are short term, right?
Yes, exactly. And that's one of the problems is that, the passage of time went by. I think there was a real feeling after the conviction of Arthur Andersen was overturned by the Supreme Court unanimously that, and we went from the fabulous 5 or whatever you call them to the big 4, the final 4, that, you can't put another accounting firm out of business. So once the rest of the 4 sort of understood that, it's not that they felt they had a license to do wrong as much as they didn't have that, fear of God that they had for a year or 2 after Andersen was put out of business, that we've got to watch our step.
It kind of reminds me like coming off of the financial crisis, or not the financial crisis, excuse me, the tech boom, right? And you're having the analysts and the underwriters, and it's just like, it feels like things got obviously very messy.
Yes.
We know it did, right, in terms of conflicts of interest. I guess the question is at this point, so memories are short. Are investors better protected? Because, investors lost a lot of money on Enron.
And even more, I think, on WorldCom a few months later.
Good point.
In fact, Sarbanes-Oxley would not have been passed. It was starting to bog down in the summer of 2002. But then when WorldCom came, and that was like, twice the size.
Is that the golden umbrellas? Was that do you remember, like the decorating? I'll look.
But WorldCom was much bigger, and that really created the momentum to pass a controversial law like Sarbanes-Oxley, because the CPA firms, they have a lot of strength, a lot of juice in Washington.
So could Enron happen again?
So we haven't seen it. We haven't seen anything on the scale of Enron or WorldCom, and that's for a number of reasons. So there's a certain point you can, the auditing firms can be congratulated for that and the work of their overseer, the PCAOB, the Public Company Accounting Oversight Board, which was set up by Sarbanes-Oxley. However, one of the biggest factors, and I didn't have the room to go into this, that has helped investors is a component of Sarbanes-Oxley that was strengthened in Dodd-Frank that basically protects whistleblowers. So there's been a shift in the last 20 years in the attitude towards whistleblowers, who I think used to be considered traitors, rats, ingrates, whatever. In general, it was not something you wanted to be identified as 20 years ago. It's not like people want to now. However, look at the way Frances Haugen of Facebook has been celebrated and put on 60 Minutes. It's very much, the SEC's program, the Whistleblower Reward Program, I think passed the $1 billion mark last year. In fact, this current year is like the best year they've had. That, even more so, that's probably done a better job than the big 4 auditing firms at alerting the SEC to accounting problems.
Which is so interesting, right?
That's amazing.
Basically reaching out to the people, right?
Yes,
to be
absolutely.
responsible and really, oversight or governance.
It's a story about
in terms of these
incentives.
firms.
Yes, exactly. And so they're protected, and it's been a phenomenally successful program for the SEC. I think it's really helped prevent frauds from mushrooming. I spoke to Sharon Watkins, the Enron whistleblower, just yesterday for the other piece that we did today. And as we were chatting, and I told her about this piece about Arthur Andersen, because she was an accounting expert, and warned that Enron would go down in a wave of accounting scandals, which in fact it did. But she also pointed out, as she wasn't technically a whistleblower, but she sort of adopted that profile, that it is different today, and that whistleblowers have played a tremendous role probably in preventing, a lot of, the SEC busts a lot of frauds at small to mid-cap companies, and, if it weren't for the whistleblowers, these things could have mushroomed into something much bigger. That's what happened with Enron and WorldCom.
It's amazing. Great reporting, as always. Thank you so much. Greg Farrell, he's investigative reporter for legal enforcement team here at Bloomberg News, and that story in the current issue of Bloomberg Businessweek magazine. It's on newsstands, online, and on the Bloomberg. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Thursday, December 2nd. The Dow, the S&P, NASDAQ all advancing. Risk on. Stocks heading to their biggest rally since October. Dip buyers scooping up some of the hardest hit shares in a two-day sell-off. Now, companies that do stand to benefit the most from growth driving today's gains. Small caps and travel stocks are surging. The Russell 2000, we begin there, up 2.7%. The NASDAQ 100 index up 0.9%. The NASDAQ Composite Index also up 0.9%. Right now, up 137 points. S&P 500 Index up 73, a gain of 1.6%. Dow Industrials advancing 671 points, up by 1.98%. 10 years down 12.30 seconds. 10-year yield 1.44%. Spot gold down 0.9%, 17.66 the ounce. And West Texas Intermediate crude up 2.4%, 67.12 for a barrel of WTI. Natural gas, by the way, down today by 3.5%. The newly discovered virus strain has been one of the main catalysts for the recent slump in U.S. stocks. Megan Green is a senior fellow at the Harvard Kennedy School.
If this variant becomes dominant and actually evades vaccines, we could see what we saw back in, early 2020, where people stop going out regardless of government restrictions and just stop going out and spending. If going to the bar will land you in the hospital, no one's going to do it, in which case demand will fall off significantly, and that would be disinflationary.
OPEC and its allies will proceed with their next oil production hike, but say they could revisit the decision at any moment. Oil stocks are higher. ExxonMobil up 2.9%, BP up 5.5%, Chevron up 2.9%, EOG Resources up 1.9%, and Pioneer up by 2.2%. That's a Bloomberg Business Flash.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plants are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
All right, folks, you are listening to Bloomberg Businessweek. Carol Master along with Tim Stanovic. The Bloomberg Big Take today, Goldman Sachs top bosses pushing for new ways to juice their own pay. If you're shaking your head or sitting up and taking notice, then do not go anywhere. This story, by the way, the most read on the Bloomberg today.
Sri Natarajan is a finance reporter for Bloomberg News. He's with us in the Bloomberg Interactive Brokers studio. So, Sri, tens of millions of dollars a year? Not enough for the top folks at the biggest banks?
People. Perspective.
You say that, but I'll tell you this honestly, and I think we look at this trend through the lens of Goldman Sachs. Goldman Sachs is an institution that in many ways is representative of Wall Street, and you can bet that this is the same sentiment at the senior ranks of JP Morgan and Morgan Stanley and other such places. It's ridiculous in some ways and unsurprising. Bank CEOs are kind of the poor millionaires. They are out there advising so many clients and people who are trading crypto and whatnot and become overnight billionaires. And these guys who've been commercial all their lives feel that, they're losing out.
Hold on. Bank CEOs are the poor millionaires. I like that.
It's not untrue. 200 million is David Solomon's stake, the Goldman Sachs CEO stake in his firm's shares that are vested and unvested.
200 million.
Roughly 200 million. It's in that ballpark.
Okay.
That is a lot of money. But then you go and deal with Ken Griffin and see that his wealth is swelling by billions of dollars every year. Chase Coleman at Tiger Global. Some of your own underlings who are leaving for jobs where they're paid 4 to 5 times of what they used to get paid, and even worse, 4 to 5 times of what you are getting paid. It's bound to create a sense that maybe you're missing out. And that sort of explains some of the push from the Goldman executives that we talk about in the story on how they're trying to pull various strings to find ways to augment their pay, shall we say. And one of the reasons why the board of directors might be amenable to something like that, because they recognize 15 years since the crisis and the fact that there's still this artificial ceiling on how much you can pay an investment banking boss because you really do not want to draw public attention. Maybe you got to find other ways to make it worth their while.
Is part of it, though, so much here, but is part of it, too, they don't want to lose these people either. And so in the reality of a world where you could go to private equity and make a ton more money, I know it, we do all the stories on it, is this also a way of retaining some really good talent at these firms? And so they're thinking about, okay, how do we change maybe the compensation scale? How do we let them maybe pursue some other efforts or the firm where they can get to benefit more directly?
Let me answer that two ways. Short answer, yes. Long answer, when you are the CEO of an important institution like a major investment bank, like a major US bank, you've always given up some of the more lucrative options. 15 years ago, Lloyd Blankfein, Jamie Dimon, they'd already made a lot of their money by then, and they could have made a ton more outside. They didn't, because what they're giving up in terms of that unbelievable amount of additional pay, they get by being the centers of attention. Every word that they say, markets hang on to them. They get the attention of country heads, kings and queens across the world. And that is the benefit that comes with the seat. And in some ways, if you look at it, what used to be the pinnacle of money and power, the power aspect is starting to dwindle and diminish. How many heads of Goldman Sachs and JP Morgan, Morgan Stanley in this day and age can go to Washington, D.C. and hope to be the next Treasury Secretary? That was almost right away 20, 30 years ago. Not so true anymore.
Sri, what are executives at Goldman Sachs considering right now in order to boost their pay? What did you report on?
I mean, some of the things we've shown in this story, they've already laid the groundwork for some signature pay bumps going into 2022. They've pressed with some success for incentive packages, and they're also looking at various ways that they could get a slice of some of the richest rewards thrown by the bank's own specs, the blank check vehicles that have become so popular this year, especially because of the founder shares and the promote that is really attractive to those people who are running the specs.
How do you get boards, how do they get boards to buy into this? Because as you explore in the story, since the financial crisis more than a decade ago, there has been an association with outsized pay at the big banks.
There's a lot of wink, wink, nod, nod conversations to pointing out, look at all these people who've left the firm. Look at all the opportunities available to them. And you know that you can't take our salary, even when we've had a bumper year from 25 million to, what can you do, 35, 40, 45? They're not going up to 75 million tomorrow, even if their earnings of the entire firm has nearly tripled. That's not happening. So they're preying on the board and saying, you got to consider it, and the board is clearly considering it.
But are we potentially setting up for some conflicts of interest so that if there's your CEOs of Goldman or your top executives are involved in a SPAC that goes out to the public that investors invest in, like, isn't there the potential for some problems there?
Actually, on that front, one could possibly argue, and I would agree with the view Goldman Sachs takes on it, is their argument is we align incentives with our investors. We want the funds to perform well. Now we have skin in the game. We want them to perform really well. So on that front, you could arguably say that they're interested in making sure these things perform well, and there are aligned incentives.
But at what lengths are they willing to make sure that these things do well? Like do you know what I'm saying? Like, you do wonder. I don't know.
I have to think they'd go to play the other side on this. I have to think they would go to great lengths to make sure that these things go well, which is why there isn't so much of a, wait, what are they doing at the expense of the company? But it's still an interesting dynamic of what are they doing to try and juice their pay, and why does $25 million not cut it anymore? And the bigger point we're making is you're in this era of hyper wealth creation, where an Elon Musk is worth $300 billion, where every day you have news of a new private equity, crypto, tech titan emerging, and these guys feel left behind.
Man.
Pour one out.
Well, hopefully we can continue this, because this is a big one. Sri, thank you so much. Sri Natarajan, finance reporter at Bloomberg News. Most read story on the Bloomberg in the past 8 hours.
Let's head to Washington, D.C. for Check the Latest News. Hey, Nancy Lyons.
Hey, Tim. President Biden says the nation needs to be ready if COVID-19 cases surge this winter, especially with the onset of the new Omicron variant. So he's announced a new 5-point strategy.
It doesn't include shutdowns or lockdowns, but widespread vaccinations and boosters and testing and a lot more.
Biden says we're in a much better place than we were last year, noting roughly 72% of Americans will be fully vaccinated by Christmas. Secretary of State Antony Blinken says he was candid during a 30-minute conversation he had today with his Russian counterpart, Sergei Lavrov. Russian troops have mobilized near the Ukrainian border, and Blinken says he told Lavrov during their conversation that further action will be taken if Russia continues its aggression.
It was serious. It was sober. I believe that the foreign minister will take the conversation back to President Putin.
Blinken says he made it clear the U.S. and its European allies will impose severe costs or consequences on Russia if it continues its current course against Ukraine. Lawmakers on the January 6th Select Committee investigating the insurrection are forwarding to the full House a contempt of Congress resolution against former Assistant Attorney General Jeffrey Clark, who allegedly worked to block certification of last year's election by Congress. Clark is refusing to provide documents and answer questions. The UN headquarters in New York City was locked down for several hours today after a man was seen pacing outside with what police said appeared to be a shotgun. The man was taken into custody without incident. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that update, Nancy Lyons. Tim Stenivek and Carol Mass are live in the Interactive Broker Studios.
I am still blown away by that story by Sheree.
It's a reason it's the most read.
And I was thinking about the Bloomberg 50, right, which is the cover story. It's a takeover of the magazine. It's a list of 50, interesting ideas and people. And one of the things is a group of junior investment bankers, right, who put together a deck, right, or basically got together and we're like, here's what we want. We're tired of working around the clock. We want some different things. And I just think about the interesting things of the senior execs wanting more money, right? And figuring out how to do that essentially. The junior investment bankers saying, wait, we want a little bit more flexibility. It's just pretty wild, one against another.
I guess a lot of people think no matter how much you're getting paid, sometimes people think they deserve more.
Well, yep, it's kind of a list. And when you take a look at the list, the private equity guys tend to be way up on that list. We've got a story that has to do with Steve Schwartzman of Blackstone. Over 2 decades, Tony James and Steve Schwartzman became a duo to be reckoned with in the deal-making world, building Blackstone into a dominant force in private equity. Turns out now, only Schwartzman is left.
Yeah, we know the news that James, 70 years old, is going to retire as executive chairman. It's the latest sign of a changing of the guard when it comes to Wall Street's storied leveraged buyout shops. It also leaves Schwartzman as the lone holdout among a generation of billionaire founders who've recently passed the torch to a younger set of leaders. He's 74, Carol.
Yeah, and praised his colleagues' handling of the changeover while saying nothing about his own plans. James, quote, gave us the gift of time by beginning the conversation around succession well before his intended exit. Schwartzman saying in an internal memo that we got here at Bloomberg, quote, this allowed us to identify, develop, and train a terrific successor in John Gray, who we know from our team here at Bloomberg are Jason Kelly and others, Shanali Basak. A lot of them have talked to John Gray, and he certainly has been very prominent when it comes to Blackstone.
Well, part of the changing the guard, of course, includes the billionaire co-founders Henry Kravis and George Roberts stepping down at KKR, and then earlier this year, Leon Black stepping down at Apollo.
Yeah, we definitely are seeing the transitioning happening when it comes to the private equity firms. All right, you're listening to Bloomberg Businessweek. Carol Massar, Tim Stenivek.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World headquarters, I'm Charlie Pellet. We begin with a developing story. U.S. antitrust officials are suing to block NVIDIA's proposed takeover of ARM Limited, saying the deal will harm competition in the semiconductor market. It is an update for the Dow, the S&P, and NASDAQ. In fact, we're looking at the best days since October. Dip buyers heading into the market. Let us get the latest now as we head over to the First Word breaking news desk with today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are surging after yesterday's sell-off, with the Dow currently up 645 points. S&Ps are higher by 69, and NASDAQ rises by 132. The U.S. 10-year yield at 1.44%. Gold is down 14 points, and transports rise 500. Among the main 11 S&P sectors, all were in the green, led by gains in the financials, real estate, and the industrials. Leaders to the upside in the Dow, Boeing, American Express, and Visa, while Walmart led to the downside. After earnings, Snowflake rose as much as 15%, and Kroger surged 11.5%. In other news, CoinDesk reported that Goldman Sachs is mulling accepting Bitcoin as loan collateral. Dollar General said the U.S. store traffic is a little bit soft, and New York reported the most daily COVID-19 cases since January. Wrapping things up, DocuSign and Ulta Beauty report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk SQUAWK on your terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that update. Well, according to the American Christmas Tree Association, last year, 94 million U.S. households celebrated Christmas by displaying a Christmas tree in their home. Of those trees, 85% were artificial, 15% were live, Tim, and similar consumer demand is pretty much expected
I had no
this year.
idea.
I didn't either.
There were
of the
so many
breakdown.
artificial trees.
I didn't either.
Wow.
Although it's interesting, I look in my family because of travel and things that we were mostly a real Christmas tree family, and I have a brother who's like, you know what, because we go travel and we eat the tree, you know, they bought a artificial tree last year, so I was blown.
Well, let's talk about it with Marcia Gray, Executive Director of the Christmas Tree Promotion Board. Joins us on the phone from Howell, Michigan. Great to have you on the show, Marcia. Thanks for joining us. How are you?
I'm doing great, and thanks for letting me join you, because we definitely want to talk about those real Christmas trees.
And I love a real Christmas. I actually have two real Christmas trees.
There's nothing like the
put in my
smell.
home.
You know what's great about New York City, and you don't realize this until you live here or come here during the holidays, but the way they sell Christmas trees here is on the sidewalk.
Sweet, isn't it?
It's very sweet. So you're walking down the sidewalk, and you have to walk through these, Christmas tree sales. So you're just getting that great pine smell when you're walking through.
It is. It's one of my favorite things. So tell us how things are going, Marcia, this year. What are your expectations? And you know what we're going to ask you about. Are there going to be enough trees for everybody?
Well, I'm really glad we have a chance to talk, because the Christmas Tree Promotion Board, like the National Christmas Tree Association, we represent the real Christmas tree growers in the U.S. We don't work with artificial. That would be the American Christmas Tree Association. So two different groups at work here. We're expecting a really strong season. Last year was a very good year for real Christmas trees, and it's kind of interesting. This question's been popping up about availability and shortage, and I definitely want to get to that. But I'm glad we're asking the question, and I think it's happening because we are seeing more interest in the real thing, in the real Christmas tree, and consumers want to make sure that they can get one. In fact, last year, we always do consumer testing. We talked to people last year who had purchased a real tree for the first time during the pandemic in 2020. 89% of those said they wish they'd started sooner. So we know we're going to have strong sales this year.
Wow. Hey, so what about when it comes to costs of Christmas trees? Again, my idea of a price is changed by living in New York City, where they're incredibly expensive. But how have you seen prices fluctuate at a time where we are talking a lot about rising prices for consumers?
Sure. Christmas trees will probably be the same as almost every other thing that we're seeing. The cost of the tree production goes up just simply because labor, fuel, fertilizer, our growers have some increased costs. But again, the wholesale price of the tree is not, it does not encompass, the entire retail price. Retail prices are set individually, and you're right, you will see something very different, for example, in New York City than you might see in, let's say, Des Moines, Iowa. But those retail prices are impacted again by that selling area. So their overhead, their costs that they have to hire people to run that tree lot, or to the real estate that they're paying for. We expect that the prices for the trees are up slightly this year, but I don't think anyone should be expecting some, we've heard some crazy reports about doubling of prices, and that's just simply not going to be happening.
What about the logistics and in terms of transportation? I think it's just such a big cost, or a big part of the cost equation when it comes to Christmas trees. What are we knowing about that? We all know filling up at the pump that those prices have gone up. It's got to be the same, obviously, for some of those truckers. What do we know about that front? And also, do they have enough labor? And truckers, we did a story earlier about now teenagers, 18-year-olds being allowed to maybe become truckers because of the shortage of demand. So what are we seeing on that front?
Yeah, so trucking obviously was one of our biggest worries. The cost is up on the trucking. The exciting thing is we're talking here on December 2nd, most of the Christmas trees have been delivered. It's done. It's over and done. They are in market. They're not sitting waiting. The interesting thing, real Christmas trees, all real Christmas trees sold in the U.S. are grown here in the United States or with our partner Canada. So we're not worrying about things being stuck in a cargo ship somewhere. We are really talking about that domestic shipping or trucking issue. But we have the trees are there. They're in market. Took a little bit longer maybe for some locations to get all of the trees delivered, but pretty much the job's been done.
Okay, I got to ask, because this is very controversial. After Christmas, when is the right time to dispose of the Christmas tree?
Well, number one, we do encourage you to, if your tree is drying out, we do want you to get it out of the house because it can be messy and you're kind of done with it. Whenever you'd like to take it is fine. What's really interesting when you dispose of a real Christmas tree, it is 100% biodegradable. Most trees are picked up, your local municipalities will announce dates that they're going to be picking up the trees. Most of those trees go to get chipped into mulch. So you really want to make sure you have your tree out there for that pickup program so the trees are going to the right place and are disposed of properly at the end.
Hey, real quick question, just got about 20 seconds here. Are we doing enough to replenish and make sure we have trees for the environment, which we know we need so much?
This is really important. Real Christmas trees are a farm-grown product. We do not take them out of forests, so farmers are constantly replanting. You can feel really good about that choice.
All right. Happy holidays. Merry Christmas. Have a great holiday season. Great to catch up with Marcia Gray, Executive Director at the Christmas Tree Promotion Board, joining us via Zoom from Howell, Michigan.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Businessweek.
Yes, indeed, it's Bloomberg Businessweek. So, of course, we marked the end of an era with Dave Wilson yesterday, but the chart of the day lives on.
It continues. Kriti Gupta is taking over for Dave Wilson in just a few minutes. She's going to join us with her inaugural chart of the day.
All right, we're going to get to that in just a moment. First up, though, back to your top business headlines. A look at that trading day. Charlie, 29 minutes to go.
Indeed, green on the screen. We've got the Dow, the S&P, NASDAQ holding close to session highs, but a couple of developing stories I want to get to first before the markets. International Monetary Fund Chief Economist Geeta Gopinath is set to take over from Jeffrey Okamoto as the institution's #2 official. Now, this move is a surprise because Gopinath, the first woman to serve as the IMF's chief economist, said in October she was planning to rejoin Harvard in January to retain her tenured faculty post after 3 years of public service. The other developing story, Federal Trade Commission says it is suing to block NVIDIA's acquisition of ARM from SoftBank. NVIDIA shares have paired gains. Right now, NVIDIA is up by 2.4%. The Dow, the S&P, NASDAQ on track for their biggest rally since October. Dip buyers scooping up some of the hardest hit shares in a two-day sell-off. S&P up 77, up 1.7%. The Dow close to best levels right now, up 710, up 2.1%. NASDAQ up 163, up by 1.1%. Tenured on 12/30 seconds. 10-year yield right now 1.44%. Gold down 0.8%, dropping $14 the ounce to $17.67. Crude West Texas Intermediate up 2.7% now, $67.31 a barrel. South Africa's government is resorting to cash incentives to counter widespread vaccine hesitancy and apathy as the country contends with an upsurge in coronavirus infections driven by the new Omicron variant. Health experts are monitoring the variant carefully and what it means for people who've already had their shots. Dr. Chris Beirer is a professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health.
We're trying to understand the level of vaccine protection that we may have. And the strong suggestion really is that there may be a dilution, there may be a diminution in immune response, and that's why the message is coming out about the importance of boosting to get that immune response back up to protected levels.
Dr. Chris Beirer discussing Omicron. He's with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we check every day at this time. They are all lower. Red on the screen. The market moving higher, by the way. Pfizer down 2.7%. Its German partner BioNTech, its ADRs down 0.1%. ADRs of AstraZeneca down 0.3%. Moderna down now by 2.2%. J&J, Johnson & Johnson down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, usually at this time, we'd be hearing the song of the day, and we'd be, well, I would say I would be getting it wrong. You would be half the time, Carol.
Be careful, it's Stanovic.
Okay, 90% of the time, you'd be getting it right. But it's the start of something new here. And joining us now is Kriti Gupta, markets correspondent for Bloomberg News, with her chart of the day. Kriti, how are you?
I'm good. I don't have a song of the day, though.
That's okay.
You know, our
you don't need a song of the day.
Our producer, Paul Brennan, asked me, and he was like, you want to do song of the day? And I was like, do you want to listen to Enrique Iglesias on repeat? Because that's what it's going to be like.
Do you have Spotify?
I do have Spotify.
You know, they do the yearly wrap right now is what everybody's sharing on.
Yes, it is all the rage.
Yeah, it's what everybody's sharing on social media right now.
Would it really be Enrique Iglesias?
I was going to ask you if that was your top.
Yes.
Okay. No judge. No
but
judge.
You know what? Paul Brennan came to the rescue of our listeners, and he was like, I'm just going to save everyone from this. So sadly, no song of the day yet. Maybe one day.
But what we do have is stock market volatility.
We do have stock market volatility, which brings me to the chart of the day, which is, for our radio listeners, essentially a chart that shows that people are bullish on the dollar. And this is significant because this has ripple effects across the market. So let me break it down here. Since 2020, we're going to take a history lesson. Since 2020, one of the major themes has been you had this big market crash, you had this big COVID pandemic began. And everyone just kind of ran to the dollar. They said, with the dollar, you can buy treasuries, you can buy stocks, you can buy oil and commodities, you can buy emerging market debt, whatever in the world you really want. It was the wild card, basically the wild card in Uno. You can do anything you want with it. And for a really long time, that was such a big kind of thing to have that for the next about year and a half, you just had people keep selling the dollar because they had accumulated it so much until July of this year, when you started to see a lot of these funds build up their positions in the dollar more. Some of that is because of that haven ability that I just outlined. Some of it is because they were starting to expect rate hikes from the Fed to address inflation. But at the end of the day, really, it's this idea that with the dollar, like I said, you can pretty much do anything. And that's really what the chart of the day symbolizes. And with the equity volatility we've seen in the last couple of days, essentially, that so many people are hopping in and out of stocks, eventually you have to kind of rebalance your portfolio, the fund managers do, and they do it with the dollar. And if you start to have your stock market change by this much of a margin, you have to change your dollar too. And if the dollar changes and kind of flips into from red to green, it ripples across the entire world. So you started to see these kind of crazy moves in the euro, in the pound, in EM currencies, which is totally not normal when you have a COVID variant going around.
What happened 6 months ago that caused this change?
All about inflation. It was those rate hike bets that started to come. So you started to see, the dollar wears so many different hats.
Right.
It's a haven. You can do anything with it. But it also is very receptive more recently to what's going on with the Fed and what's going on with the rate hikes instead of more kind of the haven bid.
Well, we tend to see, right, on higher rates, an increase in the dollar.
We do, but the margin of the move is the phrase of the day, is really the difference, because sometimes you'll see yields higher and dollar move a little bit, but right now it's essentially most of the move is what's going on in yields.
Creedy, so what's the importance, I think, about our audience who are sophisticated investors, the layperson is being like, all right, Creedy, why do I care?
Why do you care? Because if the dollar continues to get stronger and stronger, think about when you're converting your money and you're taking a trip abroad. That is going to, I guess for the American traveler, it's great, right? You can do far more. Plan that Italian vacation. Mask up, but plan it. But if you are coming into the United States, or if you're an investor, or even if you're, say, an investor or a retail investor in China or Europe, and you want exposure to Apple or Microsoft, that's going to get a little bit expensive.
Do we also have to think about the overseas profits of like American companies when they come back into dollars? That could ultimately then impact the bottom line, right? Or top and bottom lines.
McDonald's is the best example for that, because most of their revenue, I think 60 or 70%, comes from abroad, but they are headquartered in the United States. So when they bring their profits back, they have that currency exposure, and this is something that would affect their bottom line.
Well done. Your first chart of the day.
Thank you.
The first of many, so looking forward to it.
Do you have tomorrow's chart picked out?
I do have tomorrow's chart picked out. Come on, it's payroll.
Oh, yeah. Okay.
Get it together.
Well, I don't know how it works.
I don't know either. Which is why Creedy does the chart of the day, Tim Stenovec.
You can sign up for Creedy's chart of the day at kgupta129 at bloomberg.net, and check her out on Twitter and Instagram at Creedy Gupta News.
All right, we'll see you tomorrow, Creedy. Let's get to World and National News. Over to Nancy Lyons. She's in our 991 newsroom in the nation's capital. Hey, Nance.
Hey, Carol, thanks. House and Senate leaders say they have reached a deal on a bill to fund the government into mid-February, averting a shutdown entering the weekend. Senate Minority Leader Mitch McConnell is pushing back, though, against a small group of Senate Republicans who've threatened to shut down the federal government in a bid to defund President Biden's vaccine and testing mandates. McConnell spoke about it on Fox News.
I don't think shutting down the government over this issue is going to get an outcome. It would only create chaos and uncertainty. So I don't think that's the best vehicle to get this job done. I think the courts are likely to get it done, or will pass early next week, freestanding a measure to overturn the government mandate.
McConnell again speaking on Fox News. A second case of the Omicron COVID variant has been confirmed in the U.S. Bloomberg's Nathan Hager with the latest.
The case is in a Minnesota man who had recently been to New York City for an anime convention. Minnesota health officials say the man, who is vaccinated, developed mild symptoms on November 22nd, a day after the convention ended at the Javits Center. He was tested on November 24th. Officials say his symptoms have resolved. In a statement, Minnesota Governor Tim Walz says the news is concerning, but it's not a surprise. About 50,000 people attended that anime event on Manhattan's West Side. In Washington, I'm Nathan Hager, Bloomberg Radio. Radio.
President Biden unveiled today a new 5-point plan to prepare for a possible surge of cases this winter, especially in light of the Omicron variant. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Still getting over Enrique Iglesias. Although, what's not to love, to be quite honest with you.
I was surprised that Creedy would be.
All right, we're going to have to take her out, maybe.
Yeah.
Share some music lists, Spotify lists, right?
Exactly, the Spotify yearly wrap.
All right, hey, listen, we want to bring you this. This is going to be part of my gainers a little bit later on when we do Beyond the Bell with our TV team. It's Trump Day, as stocks tied to ex-President Donald Trump stage a rally. Donald Trump helping spark a rally in some stocks today following a report that the former president's media group is in talks to raise as much as $1 billion.
That's Digital World Acquisition Corporation. It's
DWAC for those in the know.
Yeah, the blank check company that is set to bring Trump Media and Technology Group to the market surged as much as 22% after Reuters reported that the nascent social venture is holding discussions on financing. The news is also boosting other stocks that have ties to President Trump.
Exactly, and I've got one of these. By the way, DWAC, which was up almost 22%, now up about 8.6%. I just like to say it, DWAC.
You do.
Listen, this is so funny. The other stock is Funware. It's a software company.
Fun with a PH, truly.
Go team. I know, it is. Funware, Phun.
Yeah.
Funware. Software company that worked on Trump's re-election campaign, leaping as much as 24% today. CF Acquisition, the sixth, because there are others. If you look at the Bloomberg terminal, it's a blank check company sponsored by Cantor Fitzgerald. It rocketed up 47% before pairing some of those gains. It agreed to merge with video platform Rumble, which touted Trump as among its top creators and highlighted an acceleration of big tech censorship in an investor presentation.
Wow. Look, I think it's still important to point out that we don't know exactly what Trump Media and Technology Group is going to do. We don't have the details about what this is going to look like, how they're going to take on social media giants with their own version of these platforms.
Right, but there's certainly interest, and we do know if we just look at the media universe, we certainly saw it during the presidential election that eventually led to President Trump in office. You know, whether it was Fox versus CNN, people are gravitating towards platforms that they relate with.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks at or near session highs right now. We are on track for the best day since October. Bonds are dropping. We begin with the 10-year. The yield there, 1.44%. 10-year down 11/30 seconds. But the Dow, the S&P, NASDAQ looking at the biggest rally since October. Dip buyers coming into the market, scooping up some of the hardest hit shares in a two-day sell-off. Notable exception, Apple, down now by 0.7%. The NASDAQ Composite Index up 1%, up 151 points. S&P 500 Index up 71, a gain there of 1.64%, while the Dow is up 688, holding on to gains ahead of the close, up now by 2%. Broad-based gains, Russell 2000 up 2.9%, NASDAQ 100 Index up by 1%. 10-year worth repeating, 1.44%. Gold down 0.8%, 17.67 the ounce. West Texas Intermediate crude up 2.3%, 67.06 a barrel. Among some of the names reporting after the closing bell, Marvel Technology and DocuSign. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Germany's next government brings together an unprecedented partnership, a coalition of center-left social democrats, market liberal free democrats, and Greens. Unlikely as this alliance might seem, it's a promising venture. The prospect of a modernized, energetic center is a hopeful one. The building of this coalition, swift by German standards, was an achievement in itself. The Social Democrats, Olaf Scholz, who will serve as chancellor, struck compromises with his partners in a way that signals purpose, pragmatism, and moderation. To be sure, the parties have different priorities. Given the challenges Germany faces, there's a chance the whole enterprise could collapse. But Scholz and his partners have this much in common. They know that people who disagree can nonetheless work together toward shared goals. Germany isn't the only country where that unfashionable concept is due for a comeback. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it is just about 10 minutes away from the closing bell on this Thursday.
Connection lost.
To wrap up the trading session, and as Charlie mentioned, we definitely have seen a rally today. We're hovering near our best levels of the session on the S&P Dow and the NASDAQ. Let's get to it with Brian Jacobson.
Brian Jacobson is Senior Investment Strategist at Allspring Global Investments. They have $587 billion in assets under management. Brian, how are you? It's good to have you back.
Yeah, thank you so much for having me here. It's a beautiful day here in Wisconsin, 50 and sunny.
Well, what do you make of today's trade? I should say, put it in the context of what we've seen this week, which is a lot of volatility. In fact, the last 2 days are the worst back-to-back days that we've seen since October of 2020. And today, we're seeing this rally. So what do you make of the dip buyers continuing to come back in after big declines?
Yeah, it just seems like people can't make up their mind. Is this good or is it bad? And I think that it's actually just emblematic of the type of uncertainty that people are really trying to wrestle with here, right? I mean, a lot of people like to say markets don't like uncertainty, but the fact is we deal with uncertainty all the time, right? We have to manage it. It actually creates opportunity.
Yeah, I mean, the last year and a half has been all about uncertainty one day after another, right? And we see the different swings. I am curious, Brian, that are you able to start thinking about, all right, what is, especially for your clients and your investors, what is the longer term strategy that makes sense? And I'm going to say 6 to 12 months, which really isn't long term, but do you feel like you have some confidence to kind of have a feel of what the environment will be in the next year?
We think we do, and that's the thing that I think that where there's the disagreement, where we viewed the opportunity, say on Friday with the sell-off, and then you had the Monday rally, but then the Tuesday sell-off. Those sell-offs we viewed as an opportunity to load up a little bit more on those areas that we like the most. Like, for example, we do like, say, energy. We like more cyclical areas, so smaller cap, more value names, emerging markets. Credit on the fixed income side as opposed to the super safe treasury securities, and it's mainly because over the 6 to 12 month horizon here, we think that a lot of these problems that are plaguing the markets right now are really supply chain driven. We'll probably see that improve in accelerating way.
Wait, are you saying it's transitory?
Not allowed to say that anymore.
Did you not listen to Jay Powell this week?
Yeah, apparently he told us that we shouldn't use that term anymore. But I think the problem is that they didn't operationally define that term when they first used it.
Well, isn't that the point? Like, we really don't.
Like 6 months.
Right, we don't really know what transitory meant, and that was the problem. And I almost took from what he did this week is like, let's just stop talking about it, because here's our predicament. We're dealing with it. We don't know how long it's going to last, but it's safe to say that the Fed doesn't think that this is going to go on forever. But let's just get rid of the word, because it's just messing everybody up.
That's right. Yeah, it was kind of distracting, I think, from the fact that they were stuck between a rock and a hard place, right? I mean, you had, and that's what happens when there's a supply chain shock. Monetary policy really can't do much about that because they can't create more growth in the short term. And then you have the higher inflation that's supply chain driven. They can deal with more demand side issues, but not supply side issues. And for us, we actually put out a note back in March of last year saying transitory, you should think of it as being 12 to 16 months. And I think that's kind of playing out here, because if it is supply chain driven, we'll likely see some improvements at an accelerating pace, in which case we could get stronger growth in the fourth quarter, stronger growth in the first quarter of 2022, and also a decline in this inflation impulse. And so that actually creates a bit of a sweet spot for the Fed, because they can taper the asset purchases, maybe wind that up because the crisis is effectively over, but then they don't have to be in a hurry to hike, right? So you can actually have, they've been stuck in a predicament, but then they can be stuck in a sweet spot for 2022 when it shifts towards stronger growth and lower inflation pressures.
Okay, so help us understand, because we did hear from Jay Powell several days this week. What do you expect from the Federal Reserve in 2022 when it comes to monetary policy?
Yeah, well, our base case scenario is that they'll probably wrap up the tapering program in March, right? So at the meeting on December 15th, they can announce an acceleration of that taper. And then it gives them optionality. It gives them the ability that if inflation is falling, as we think that it will, going from these high single digits towards something closer to, we think the run rate by the end of the 2022 is going to be closer to 2.5 to 3%. If that's the trajectory, that means that they can wrap up the taper sooner, but that doesn't mean that they have to hike earlier. Right. It means that they could still probably wait until June. It gives them the flexibility that if prices aren't coming towards closer to their target come, say, May, that they are able to hike then. But our base case is they're still going to likely wait until June or July and then try it again in December. And hiking into strength isn't a bad way to be hiking. It's the same thing that happened in 2015 to 18. The market did pretty darn well during that period of time.
So, Brian, your team there at Allspring, they do their Monday meeting. They're like, all right, Brian, what do we really have to be worried about? Because, man, this last week was wacko, especially as we got freaked out once again about a new variant. We're still trying to assess it. Everybody says it's going to take maybe 2 to 4 weeks before we really understand maybe the significance of it. What do you say to them?
Yeah, I think that the biggest risk, the one that we talk about, is that we tend to reduce, reuse, and recycle fears of the past, right? So we try to reduce everything to one main thing, one main topic, and then we reuse and recycle the previous fears. And I think the one for 2022 is going to be a big debate about whether or not the Fed is going to be making a mistake. Are they going to start hiking a little bit too aggressively? And so as a result, the way that we're positioning portfolios is to still lighten up on the duration of the fixed income portion of the portfolios, just in case, not that we get a taper tantrum or a hiking hissy fit or something like that, but that we could see those longer term yields kind of swing a little bit more wildly than what people are accustomed to with their fixed income portion of their portfolio, but still to then be biased towards equities.
All right, going to leave it on that note. Brian, thank you so much. Brian Jacobson, Senior Investment Strategist at Allspring Global Investments, roughly $587 billion in assets under management, on the phone from Milwaukee. He talked about the Treasury curve and was talking about fixed income. 10-year note with a yield of 143 as we speak, 2-year note with a yield of 0.61. And this, as we see equities continuing to hover near their best levels of the session. So definitely a bit of a risk-on, reopen trade that we are definitely seeing in today's session. All right, folks, time to head over to our Bloomberg TV team, because coming up next is Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube. We're counting you down to the close on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to that closing bell. And here to help take us beyond the bell, it's Carol Massar and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. The global simulcast. Carol, I know it's your favorite moment of the day here, so let's get right to it. The S&P 500 up more than 1% on a day. That is a rebound, is it?
Yeah, well, it is a rebound. We're definitely, it certainly feels that way, but what it is, I think it really reminds me, if I look at the last week or so, that we just have a lot of volatility in this market back and forth, and maybe a rebound for the U.S. equity trade, but I've been focusing on the NASDAQ Golden Dragon China Index, down about 2% today, off its lows, but down roughly 10% in the past 5 days. We are continuing to see a pileup of headlines, including U.S. regulators moving closer to delisting Chinese firms. So I'm kind of watching that sector.
We haven't had a chance to talk about that, at least on our side of the show here, about that news. I assume you're referring to the U.S. potentially moving forward with this idea of potentially delisting. Yeah.
Right, and the increased tensions between U.S. and China on so many different levels.
Did you guys, speaking of this, not to get us off rails already, but did you see Grab, which came out today?
Yeah.
Like 30%.
We have been talking about it in a big way.
Yeah.
Hey, speaking of what I've been watching today, guys.
Tim's like, we'll talk about it later.
We are going to.
They've still has done that.
You're taking away the thunder away.
Yeah.
The relative underperformance of the NASDAQ here. And look, it's all about Apple and Tesla just weighing down the NASDAQ composite.
Tim, have you ever had a ring ding?
Portion. A what?
Remember those ring dings?
I've never had one.
I'm a yodel person kind of.
Well, we got some in the
We'll put it on the holiday.
Do you have some
beautiful ones?
We're celebrating when our executive producer became a U.S. citizen today, and yesterday. We were celebrating that. Yeah, it's a big deal here.
I bought mince pies, if anyone's wondering. I'm trying to keep him a little bit British.
Caroline's not a U.S. citizen yet, but we're working on that. We're going to get her indoctrinated as soon as we can here. Here's your indoctrination with regards to the closing bell. Confetti dropping, people clapping, bells ringing. 619 Dow points higher in the green. 1.8% on the Dow, 1.4% on the S&P 500, 45.77. That's basically your closing level. The NASDAQ composite going to close higher by about 0.8%, up 127 points. And we got to mention two things here. Dow Transport's up 3% here on the day, and the Russell 2000 up about 2.7% here on the day. We saw most of the buying today was not necessarily in those big cap tech stocks, but it was a lot of the materials names, energy names, financials, a lot of the cyclical stocks, Carol.
And, Romaine, it was a lot of the hospitality stocks. I mean, take a look at the Super Composite Hotels Restaurant and Leisure Industry Index. The S&P was up 3.8%. Airlines as a group were up 7.5%. So it was really the reopen trade in a big way. It feels like everybody's cooled off a little bit, Taylor, when it comes to concerns about the variant.
And Carol, you really see that reopening trade for our radio audiences we do every day on the sector level with the winners and the losers. And I hate to say it, but I really feel like since Thanksgiving, we haven't really had an even day. It's been either a lot of green or a lot of red. Today, of course, it is a lot of green. And as Carol mentioned, it really has been this reopening trade, this reflationary trade. Transportations, banks, dividends, energy, those are up anywhere from 2.8% to more than 4% on the day. There are two losers down at the bottom of the screen, and it's auto components really in technology. As you're thinking a little bit of perhaps out of the defensiveness with yields rising as well, Carol, those are some of the ones to the downside.
Remember when we used to do factor Thursdays? Was that what it was called?
It was Factor Friday.
Well, you run FTW on the Bloomberg. It's value, it's leverage, and it's even some of those momentum names.
Maybe we make Factor Fridays and do it tomorrow.
Yeah, Factor Thursday doesn't quite roll off your tongue.
As long as there's ring dings, I'm in. All right, let's get to some of the gainers in today's trade. Delta Airlines, I talked about the airline stocks, the hospitality trade up in a big way on this Thursday. Delta up 9.3%, so finishing pretty much at its highs of the session, $36 and change for you folks on radio. So travel stocks back, Delta top in the S&P 500, but Carnival, Hilton Worldwide, you name it. These were the stocks that were really gaining in today's trade. Also, I thought it was interesting. I don't know if you guys saw on the terminal, Bailey Lipschultz had a great column out. Trump Day, stocks tied to ex-President Donald Trump, staging a rally, sparking a rally following a report that the former president's media group is in talks to raise as much as $1 billion. So there was a different bunch of stocks. DWAC, Digital World Acquisition Corp, that's a blank check company, that was surging. Funware was up today, and the one that I want to highlight is CF Acquisition Corp, number 6, I believe it is. That stock, it's a small cap company. It's a blank check company sponsored by Cantor Fitzgerald. They agreed to combine with video platform Rumble, which you might recall took off last fall, especially among some right-leaning users. There's talk about content from Donald Trump being on that platform. Anyway, CFVI up 8.5%. And I just want to mention, is it Okta?
You have another one?
Okta, thank you very much. I'm going to ignore you for a moment, Romaine. Top in the NASDAQ 100, cybersecurity company reported after Wednesday's close, boosted its revenue forecast for the full year.
No ring ding for him.
No ring ding. It was up 11.7% by today's close.
Well, we were watching technology today, of course, Apple, a big part of today's narrative. Shares were down as much as 4.2%, but they ended up finishing the day down by only 0.6%. It's all about the demand story. Bloomberg News reported that Apple has told suppliers its demand for the iPhone 13 has slowed. We talked to Mark Gurman earlier in the day today. He said part of this has to do with those carrier deals not being as sweet as they were a few weeks ago. He says this is a blip, not a trend for Apple, and perhaps that's what investors saw later in the day as they bought up some of those Apple shares off of those record highs. Cirrus Logic also taking a hit as a result, down 4.48% today. It was down as much as 6.1%. It's a fabulous semiconductor company. Gets as much as 80% of its revenue from Apple. So when Apple moves, Cirrus.
I thought Grab was going to be on this board for our radio audience.
Didn't you try?
Apple, we have Cirrus Logic,
we tried to put it on.
Tried to get Grab.
You promised our listeners and our viewers Grab.
It didn't work. It just didn't work. C3 AI is the last one, down more than 11% today. It's an AI firm. It reported better than expected results. Not enough for a handful of analysts, including those at Needham, Wedbush, and Bank of America. They all cut their price target. Shares down more than 78% year to date, down 82% off of February highs.
Meanwhile, that headline, Grab closes down 21%, just for our radio listeners in case you were a little bit worried. Meanwhile, I mean, what's also down is your havens, because we've had a little bit more of a risk-on tone to today's trading, and I'm looking at it in the FX market, Japanese yen off by 0.3% against the US dollar. The US dollar actually staged a little bit of a comeback on the day. The Norwegian krone was feeling the pain. Why? Because oil is lower. Well, actually, oil managed to push higher, but Norwegian krone was down by 0.5%. But then we move across to what commodities did, and I mean, all over the shop. At one point today, oil really sold off as we saw an anticipated OPEC Plus making one move, and indeed they shocked the market. They continue to pump. They're giving us 400,000 more barrels. Many thought that they'd take a pause as they waited for how this new variant would play out in terms of demand, and indeed not acquiesce to some of the consumers like the US that wanted to see lower prices. Brent actually managed to pop back a little bit higher at 1.7% as it looks as though, well, OPEC Plus is just keeping its options open. They could potentially do something a little bit later.
They basically did not end the meeting.
No.
The meeting is just ongoing.
But they did say that they stand by their 400,000 for now, and that was a big surprise to the market. But WTI crude traded up 2%. I'm going to pass the ball over to Taylor because we're all talking bonds, and at the moment, well, only really the US seeing yields higher on this particular board right now.
This is incredible. We started out the week on the 2-year at 48 basis points. We're up to 62 basis points. It has just been a yield story that has continued to climb higher. You're getting some big flatness on the yield curve, down to 81 basis points on the 2s10s, despite the fact that yields on the long end, they're rising a little bit today, but overall for the week, we've gone from a 185 down to a 175. So that really tells the story, Romaine, a maybe slower growth out on the long end.
Why do I always have to be the bad guy here? So we're 62 basis points in the 2-year.
Yeah.
We had like 65 last week, like right before Thanksgiving?
We started the week, though, at 48.
Okay.
Don't take away from them.
But we're just kind of going, we're just
kind of
But yeah, I mean, a
ground.
week ago we were at 64. If you want to,
I hate being the bad guy. One day,
All right, kids, we're going to take it outside. I'm just going to say, do I have to turn this car around?
All right, how about this? How about we do earnings just for you, Carol? This is on Ulta Beauty, you know, makeup and all that stuff. They're doing well here. 3Q EPS coming in at $3.94 here. The street was looking for $1.32, so a big beat there. Net sales at basically $2 billion. The street was looking for 1.88. It's raising its guidance here. Full year comp sales. Here's your guidance here. Full year comp sales, 36% to 37% growth. They had seen 30% to 32% growth, so basically nudging up their forecast, at least from the high of the previous range to now the high of the current range, 5 percentage points. So I guess this kind of maybe gets to the idea here of the reopening trade, the idea that we are getting back outside. We need makeup. We need, other hygiene products that maybe some of us didn't necessarily need over the last year and a half.
We always need hygiene products. I don't know what kind of life you live. But what's interesting about Ulta, I always feel like this one is always on a gainer or decliner list. But nonetheless, it has definitely been gaining this year. Caroline, it's up about 34% so far.
And look how many more new stores they're putting in.
Yep.
Full year net new stores. They're going to add 44. Who says the high street's dead? They're still putting out their bricks and mortar while the rest of the world sort of shifts to e-commerce. They want to see that omni-channel presence, it would seem.
And they're in Targets. Like, I didn't even know this, but I walked into a Target the other day, and there's a whole Ulta display. So they're really smart about getting into different channels.
Yeah, and it's much more than just beauty these days, right? It's also about skincare and the idea of even if people aren't going out,
Tim likes
using
his
those sorts
skincare,
of
by the
products.
way.
Dave Kimball, the company's CEO, said that the strong third quarter performance reflects the strength and resiliency of the beauty category, the power of the Ulta Beauty differentiated model.
We may be on radio, but we're on YouTube too, so they see Tim's gorgeous mug every day.
Oh, Romaine, you're too much.
I just want to mention real quickly here, not to get us off track, Carol. I know how you like to keep us on track. But DocuSign earnings came out, and a big disappointment here on the billings number. We should just point out those shares are down 20% right now in the post-market, one of the biggest post-market moves that we're seeing right now.
All right, something to certainly watch into the Friday trade, also along with the jobs report. So that'll certainly be on our radar. We'll be discussing that tomorrow. All right, that's going to do it for our market wrap, our cross-platform coverage on radio, TV, and on YouTube. We'll see you again, same time, same place on Jobs Friday.
This is Bloomberg Businessweek with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yeah, so Romaine, our TV colleague there, of course, mentioning DocuSign, is getting hammered. It's down about 22% in the after hours following its latest earnings report. So this company, third quarter revenue, it's a slight beat, but we're taking a look at some of those numbers. Third quarter adjusted EPS was a beat too, and billings, that was a miss. So maybe that's some of the concern.
It was the fourth quarter revenue projection came in below expectations as well.
So outlook not great. All right, let's get to world and national news. Over to Nancy Lyons in D.C.
Thanks, Carol. President Biden says his administration is implementing a 5-point plan to deal with an expected surge of the coronavirus this winter. It includes an expanded booster campaign and free at-home tests.
I know COVID-19 has been very divisive in this country. It's become a political issue, which is a sad, sad commentary. It shouldn't be, but it has been. Now, as we move into the winter and face the challenges of this new variant, this is a moment we can put the divisiveness behind us, I hope.
Biden's plan comes as we learn of another case of the Omicron variant in the U.S., the second so far. Today, Minnesota's Health Commissioner, Dr. Jan Malcolm, said the person reported symptoms after a recent trip.
The person spoke with MDH case investigators and reported traveling to New York City and attending the Anime New York City 2021 convention at the Javits Center.
Malcolm says the patient has experienced only mild symptoms. The first Omicron case was announced yesterday in a San Francisco resident who recently traveled to South Africa. The House panel in charge of investigating the January 6th Capitol riot plans to hold lengthy public hearings next year. Committee co-chair Liz Cheney says there will be multiple weeks of hearings to lay out exactly what happened every minute of the day on January 6th, both at the Capitol and at the White House. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. We want to take you back to some earnings. Romaine Bostick, our TV colleague, touching on it just as we were wrapping up Beyond the Bell. But that stock is a little bit more on it. It is down about 21% in the after hours. Its third quarter billings, that seems to be a miss, and that has certainly got investors a bit worried. And that's despite a beat, it looks like, on the top and bottom line.
Yeah, shares plunging in the after hours. Carol, I want to remind our listeners, DocuSign was a pandemic play last year. It finished the year higher by 200%, but so far this year it's higher, not even including today's after-market decline, by about 5%.
Yeah, exactly. And third quarter adjusted EPS, that was a beat for estimates. Adjusted EPS of 58 cents a share versus 22 year over year. The estimate was for 46 cents. Revenue 545.5. Yeah. What's the matter?
Well, it's still about, I'm seeing it's about the third quarter billings miss, but it's also about that fourth quarter and the outlook, the guidance that it's giving.
I mean, that makes the most sense because it's forward-looking, and I think investors are going to be wanting some insight on that.
Investors wanted $574.2 million, and DocuSign is saying that it sees fourth quarter revenue coming in between $557 and $563 million. So definitely shy of the number that analysts want to see.
This is going to be really important as this is hard right now because the Omicron variant certainly has put a reminder to us that maybe things could potentially slow down. So you wonder, I personally think DocuSign, pandemic or no pandemic, it makes things so much easier.
Okay, that is exactly,
I used it. And
you read my mind. That is exactly, how do you go back? I understand the idea of people going back to the gym because they want to go back to the gym.
Right.
Right?
Getting on planes.
But after
business personnel.
not having to be in person to sign something, why do you want to go in person to sign something?
Right. To me, it's just, okay, this is a way of really just doing something so much better, and it makes a lot of sense. So we're going to have to be looking for, on their earnings call, some insight into what's going on and what they're seeing maybe going forward, what they're hearing from their business customers, right? About, listen, we're not going to need you as much, or we're not going to be using it, so we'll look for some greater insight. But nonetheless, that stock down almost 22% in the after hours, so a big move here. You're listening to Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of after-the-bell earnings. We begin with DocuSign. The stock is plunging 22%. DocuSign reported billings for the third quarter that missed the average analyst estimate. Ulta Beauty boosting its net sales guidance for the full year. Third quarter comparable sales came in with a gain of 25.8%. Estimates were for a gain of 17.4%. Ulta Beauty after hours up now by 7%. Marvel Technology forecast adjusted earnings per share for the fourth quarter that beat the average analyst estimate. Right now, Marvel is jumping by 10%. Stocks had their biggest advance since October. Dip buyers scooped up some of the hardest hit shares during a two-day sell-off. S&P up 64, up 1.4%. The Dow up 617, up 1.8%. NASDAQ up 127, a gain of 0.8%. The Russell 2000 rallied 2.7% today. 10-year yield 1.44%. 10-year down 12/30 seconds. Gold down 0.7%, 1768 the ounce on gold, and West Texas Intermediate crude up 2%, 66.91 a barrel. So again, recapping, 10-year yield 1.44%. To be sure, gold down 0.7%, 1768 the ounce. S&P up by 1.4%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we just talked about it with our TV team in Beyond the Bell, Grab Holdings mentioning it a little bit. Southeast Asia's biggest ride-hailing and delivery company. It fell sharply in its first day of trading after completing its merger with Altimeter Growth Corporation, largest deal yet for a special purpose acquisition company. We're talking about a SPAC. Grab was down about 21%. So let's talk a little bit about SPACs in the SPAC world, because this next guest knows a lot about it.
It's Phyllis Newhouse, Chief Executive Officer at Shoulder Up Technology Acquisition Corp., also the Chair of Extreme Solutions, joining us on the phone from Atlanta. Phyllis, it's good to have you back with us. How are you?
I'm wonderful. Thank you for having me back. I'm excited.
Well, let's talk a little bit about SPACs. You know, here we are, December 2nd, the Bloomberg 50 for Bloomberg Businessweek came out. And in 2020, the inanimate object on the Bloomberg 50 was the SPAC. And I think back to what SPACs were in 2020, and I'm wondering if there was some sort of peak of SPACs in 2020, given the way that we're seeing activity in SPACs decline this year.
Yeah, I think what you're seeing, in my opinion, today, what we're seeing in SPACs is that there are still high quality SPACs out there that are still getting deals done, and I think you had a lot of people saw this as an opportunity and not really focusing on what the market was about, and it caused a lot of disruption in the market, and it caused a lot of concerns in the market. But I think what you're seeing a decline now, you're seeing the really high quality SPACs survive this.
What do you think, Phyllis, is the usefulness of SPACs in particular? Since you've done one, I think when you were on with us back in March, we talked about the Athena SPAC going public. You've got another one that we're going to talk about in just a moment. But what is it about the SPAC vehicle that you think can be an instrument, a financial instrument that makes investment sense, but also can be an agent of change, especially when it comes to diversity?
Wow, that's an incredible question. When I looked at this, and even before I got into the SPAC market myself, I looked at as a sitting CEO and operating a cyber company, and when SPACs was knocking at the door, I didn't see anybody that really understood the industry, didn't really understand the business, and most importantly, that I thought that I wanted to do a business combination with that would help me scale in the public markets. And so I think where I see is a great opportunity for companies to look at this is that look at the management teams that are out there, and those really high quality management teams that have done, that are very diverse in the market in which you're trying, you may be looking to do a SPAC in. If you can see the value add, I think investors are starting to see that as well.
Well, Phyllis, let's talk a little bit about Shoulder Up Technology Acquisition Corp. It's a SPAC that's targeting fundamentally sound technology and or cybersecurity businesses. Give us some more details about the types of companies that you're looking to acquire.
Yeah, so when we look at the market today in the cyber market itself, cyber is on any company out there today doing business is looking at cybersecurity. When you look at we had a 9,000% increase in cyber and ransomware attacks just since the pandemic. Remote work locations have caused a spike in the cyber attacks. So we're looking at the type of companies that, as you look at companies that are migrating strictly to the cloud security, privacy and data trust security. We're looking at disaster recovery because once you have a breach, now you have to rebuild that infrastructure. And so we're looking at companies with vulnerability assessment as another one. Everybody wants to know, what's the big risk? How, what does that look like? And I think when you look at those types of companies that are out there, there's not one cyber company out there that can solve this global problem. There's an ecosystem of services that's needed, but not one company out there has solved that one global problem. So we think that cloud security and those other companies that I just named will be the companies that are a very good target to do a business combination with.
What's the end game for this? Is it, because what's interesting is, and I'm going to be honest with you, Phyllis, I'm trying to make some sense of SPACs, because if I look at the group overall, they are down. I mean, it's been such a story this year again. It was last year, but it is again. We saw so many SPACs coming out, but as a group, they're down. Certainly from the high earlier this year. And I'm just curious, what's the end game? Do you buy specific companies? Do you then merge with another SPAC or another company? Like, what's the plan?
Well, we hope to, if you look at the shoulder up SPAC and you look at the expertise and the experience that we have in the SPAC, we have, former military generals and admirals and CEOs, and we have former FBI directors. And the reason we structured this SPAC and really brought that level of expertise in, because we understand the landscape of technology and cyber and AI. So our subsectors are cyber and AI. But any tech company out there that would do a business combination with us would be able to leverage that expertise. Most SPACs, I'm going to tell you this, Carol, it is more transactional. We look at this as relational. Not only do we want to do a combination, but we want to be able to deploy those skill sets for a company that need this level of expertise on their team. So it's the end game for us is, yes, to get a business combination done, but how do we make that company a better public company that's solving big problems?
Well, look forward to hearing more and the progression as you continue to do things in the world of SPACs, because there's a lot going on. Phyllis Newhouse, Chief Executive Officer of Shoulder Up Technology Acquisition Corp., on the phone from Atlanta. You're listening to Bloomberg Businessweek, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Businessweek.
You are listening to Bloomberg Businessweek. Folks, we've got a really great guest coming up to wrap out our last half hour of Businessweek. And we're going to talk about the Cadillac brand electrification. We're going to do that with Rory Harvey.
Did you get to try an electric Cadillac?
I haven't yet.
Neither have I. That's because they're not out.
They're not out yet.
Soon, though.
But they are in demand. So we're going to talk about that with him in just a moment. Let's get back to your top business stories. A bunch of news, actually, after the closing bell, some earnings. Hey, Charlie Pellet.
Indeed. Let's begin. I just want to mention a stock quote for General Motors up today by 5.1%. But earnings after the bell, lots of them today. Marvell Technology forecast adjusted EPS for the fourth quarter. That guidance did beat the average analyst estimate. After ours, we've got Marvell up by about 10%. Ulta Beauty up 7% after ours. And DocuSign shares, they are tumbling down 23%. DocuSign reported billings for the third quarter that missed the average analyst estimate. Stocks had their biggest advance since October. Dip buyers scooped up some of the hardest hit shares during a two-day sell-off. Brian Jacobson is senior investment strategist at Allspring Global Investments. He was our guest right here on Bloomberg Businessweek.
Those sell-offs we viewed as an opportunity to load up a little bit more on those areas that we like the most. Like, for example, we do like, say, energy. We like more cyclical areas, so smaller cap, more value names, emerging markets.
Let's begin with small caps. Russell 2000 up today by 2.7%. NASDAQ 100 index advanced 0.7%. The NASDAQ Composite Index up 0.8%. S&P gained 64 points today, up 1.4%. And the Dow up 617, up by 1.8%. 10-year yield 1.44%. Gold down 0.7%, 1768 the ounce. West Texas Intermediate crude up 2.6%. 67.28 a barrel. Apple shares dropped after the iPhone maker was said to tell suppliers that demand for its flagship product, the phone, has slowed. Today we saw Apple down 0.6%. Boeing rose after China approved the 737 MAX for return to service. Boeing shares up today by 7.5%. And that's a Bloomberg Business Flash.
Hey, Charlie, really appreciate that update. So he talked about shares of General Motors. There is overall a worldwide push toward electrification. It's causing a 3-year wave of initial public offerings in the electric vehicle space. Could raise about $100 billion until the end of 2023. That's according to B of A. Meantime, a recent report says the global EV market size expected to reach, Tim, nearly $918 billion in 2028. And GM looking to be a major player in all of it.
Yeah, Cadillac, in fact, is looking to be an all-electric company by the year 2030. Joining us now is Rory Harvey, Global Vice President of Cadillac. He joins us on the phone from New York City. Rory, how are you?
Absolutely fine, thanks, Tim. Yourself?
Doing well, thanks. It's really great to have you. Why go electric now? Why is now the right time versus a few years ago?
Yeah, I guess there are multiple factors that come into play there. One is the market adoption ready for EVs. The second is the infrastructure out there. The third is, are the capabilities there? The fourth is, are the demand or is the demand there? I think there's lots of different data sources. I'm sure that you have access to many of them that extrapolate what is going to happen with EV adoption. And from our perspective, we think now that the time is right, absolutely, to put our foot on the accelerator pedal. Right. We have a great portfolio today of ICE vehicles, but we think now is the time to complement that with switching to EVs.
So, Rory, I'm going to ask a different question in that. Why is it going to take to 2030? Why not sooner, especially when you've got, a company like Tesla that has definitely, at this point, is out front and center and has the first mover advantage. They're now ranked as the world's most valuable car company. By far, you've got Rivian sporting the second highest market cap among U.S. car makers, despite having no sales revenue yet. I mean, that's a topic for another conversation. So I'm just curious, why not try and do it sooner rather than later? Is it logistically, it's just got to take this amount of time?
No, I think it's balancing basically what we need to do, what we need to do in terms of market opportunity with our ICE vehicles, what we need to do in terms of EVs. So as an example, if you looked at the Lyriq, which will be the first EV in terms of luxury crossover from Cadillac, we pulled that forward by 9 months. So we brought that forward and accelerated it to the back end of March in 2022. That will be followed by the Celestiq, which will be an ultra luxury brand. And indeed, without giving the timing away of all of the product portfolio, if you look at GM across the board, we will have 30 products by 2025 that are EV variants, with about 60% of those sold in the US. So there is a fairly aggressive introduction of the EVs moving forward. I guess the 2030 timescale is the period of time when we will be selling the last ICE vehicles from a Cadillac perspective. But we will certainly be in the market much earlier than that, complementing our ICE vehicle sales with EV vehicles.
Tim and I talk, Rory, a lot about wanting our next car to be an electric vehicle. Tim lives in the city. I live just outside the city. In the urban environment, you do wonder about, okay, how the heck am I going to charge this puppy? How much of your timing also is thinking about the bigger, broader infrastructure problems that I feel like we've been talking about for a few years, that in order for EVs to really come, you need to have the EV support network to be there as well, especially when it comes to charging.
You're absolutely right, Carol. I mean, that's fundamental. And if you look at some of the metropolitan areas, there's a big push in terms of infrastructure. If you look at some of the legislation and some of the activities that the states are putting in place, the momentum is really starting to build. But it's a fundamental issue in terms of being able to facilitate demand with customer convenience. And from that point of view, there's a number of things that we're doing, whether it be working with our dealer partners to put charging stations in place. We made an announcement the week before last in terms of that. Whether it be our mobile app, which basically gives customers the ability to be able to determine where to charge, which chargers are up and running, minimum downtime, etc. But it is one of the challenges that the industry faces in terms of ensuring, particularly in some of those densely populated areas, that the infrastructure is there. So again, that's part of the reason that at the moment we have the need to be able to satisfy customers from an ICE vehicle perspective, but also from an EV perspective.
Hey, Rory, when it comes to battery charging stations, how much of it is the private sector responsibility? How much is it public sector? Is it a little bit of both? And just got about 50 seconds, and then we'll come back and talk some more.
Perfect. I think it's a little bit of both. I think it's down to the incentives that are available. It's down to the distribution. It's down to private companies because there's a business opportunity. It's down to public. I think this one is a team effort in terms of putting the infrastructure in place.
Rory, sit tight. We definitely want to talk some more. Rory Harvey is with us. He's Global Vice President of Cadillac, really overseeing all of the global operations when it comes to the Cadillac brand. And I love his perspective because he's been with GM for, I think, 30 years and has been around the world, so really understands something that I want to get into with him is the global supply chain.
Well, that's also, I also want to talk about how he works within the greater Cadillac company or greater General Motors organization.
Right.
With other companies to try to work together and use scale in order to make this transition.
Right. You do wonder about the economies of scale, right? As you develop certainly a whole new brand of vehicle in many ways. All right, we're going to come back with Rory Harvey, Global Vice President of Cadillac, joining us on the phone from New York City. You're listening to Bloomberg Businessweek.
Well, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is in our 99.1 studio there. Hey, Nance.
Hey, Tim. The House is voting right now and is expected to pass a stopgap funding bill to keep the government operating. Bloomberg's Washington correspondent Joe Matthew with the latest.
Nancy, the House is expected to pass the continuing resolution to fund operations through February 18th. But there are questions about what happens when the bill gets to the Senate, where a small number of Republicans are threatening to block the bill unless it also ends President Biden's workplace vaccine requirement. Senate Minority Leader Mitch McConnell says that's an issue that should be handled in the courts.
Listen to Bloomberg's Joe Matthew on Sound On, coming up at 5 Wall Street time right here on Bloomberg Radio. Lawmakers on the January 6th Select Committee investigating the insurrection are forwarding to the full House a contempt of Congress resolution against former Assistant Attorney General Jeffrey Clark. He allegedly worked to block certification of last year's election by Congress. Clark is refusing to provide documents and answer questions. President Biden is calling on health providers to expand the availability of coronavirus vaccines and booster shots in hopes of tamping down a possible winter surge of infections and to hold off the new Omicron variant. He outlined a new strategy during a visit to the National Institutes of Health, saying it's time to pull together.
This is a moment we can do what we haven't been able to do enough of through this whole pandemic. Get the nation to come together, unite the nation in a common purpose.
Also included in his plan is free at-home testing, with the cost to be covered by insurance companies. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thanks very much, Nancy. We are talking with Rory Harvey, Global Vice President of Cadillac, on the phone from New York City. Rory, we have about a couple minutes, and then we'll do a little bit more news and then come back and talk some more. But I did want to ask you about, I mentioned Tesla, now ranked as the world's most valuable car company. We've got Rivian sporting the second highest market cap among U.S. car makers. How do you see Tesla and Rivian in the overall auto market?
Yeah, I guess that's an interesting question. To be very candid, I'd prefer to talk about GM and how we sit in the overall market, because we have our vision of a car company which has zero crashes, zero emissions, and zero congestion, and we believe that that's a key catalyst for growth. There's no doubt that there are incremental competitors that have come into the industry over the recent past, and that some of those are having successes. As you mentioned earlier in your opening, some of them at the moment have sold a very limited amount of vehicles. But I think the exciting part from my perspective is that I think that this is an incredible opportunity for General Motors, and I think it's a great investment opportunity for us in terms of growth. We had an Investor Day probably about a month ago now, where again we put forward our strategy, which was to double our revenue by 2030, whilst also expanding our margins. So I think if you look at some of the data points, it just shows the opportunity that there is for General Motors.
But do you think that some of the disruption that's going on in the auto market actually lasts because of some of these upstarts, or do you think time will tell in terms of whether or not the traditional automakers that have been around for a long time ultimately take the lead? And just got about 30 seconds, and then we'll come back and talk some more.
Yeah, I think it'll be a combination of both. I think there's a lot of changes that have happened in the marketplace. There's a lot of disruption. There's a lot of new thinking. And I think from a General Motors perspective, I'll come to the fact that, I do believe that this is an exciting opportunity, and I believe that we've got robust plans, and I think that we've got plans that will enable us to lead.
Got to say, it does feel good that everybody's all in on electrification, certainly coming off of COP26, and we continue to watch the environment at this point.
We just got to get rid of our gas.
I'm ready.
Cars.
I mean, we're definitely ready and thinking about the next car. Rory Harvey, we're going to come back with him. He's Global Vice President of Cadillac, overseeing their day-to-day operations there. This is Bloomberg Radio.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story, and now there are three. Colorado has become the third state to detect a case of the Omicron variant in a woman who had recently traveled to Africa. The Colorado case comes after two other confirmed variant cases were found in California and Minnesota. Marvell Technology is forecasting adjusted EPS for the fourth quarter. Its guidance beating the average analyst estimate. Marvell shares after earnings up by 11%. DocuSign tumbling 25%. The company reported billings for the third quarter that missed the average analyst estimate. Stocks had their biggest advance since October. Dip buyers moved into the market again, scooping up some of the hardest hit shares during a two-day sell-off. S&P up 64, a gain of 1.4%. The Dow up 617, up 1.8%. NASDAQ up 127, up by 0.8%. 10-year down 11/32. 10-year yield 1.44%. Spot gold down 0.7%. 17.69 the ounce, and crude down up 2.8%. West Texas Intermediate crude gaining $1.81 a barrel, 67.38. Again, WTI up by 2.8%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest here on Businessweek. Rory Harvey is still with us, Global Vice President of Cadillac, on the phone in New York City. Hey, Rory, I'm thinking about GM, and they're all in on electric vehicles. Cadillac, obviously a key part of that component. I am curious about, in the transitioning, especially at a time where we're talking so much about supply chains, are you guys able at this point to get all the raw materials, the minerals and things that you need to easily and continue to make this transition and keep to your timeline?
Yeah, so I guess there's a couple of parts to that. So I'll answer it first in terms of relating to semiconductors, which is one of the challenges that the global automotive industry is facing today. So that has been a challenge throughout the course of 2021, and it's still a challenge today. Having said that, I would say that we are seeing a better flow of chips now. There's been a terrific amount of work that has been done with the supply chain, indeed getting more involved and deeper into the supply chain to be able to secure the right level of supply of chips moving forward. It is going to continue into 2022. But as an example, if you looked at North America and our plants in North America, we've got the majority of them for General Motors back up and running. And indeed, as of Monday of this week, every single Cadillac plant in North America is now operational. So that's step one in terms of getting inventories to recover so that we can fulfill what is very strong customer demand at the moment. So we're looking forward to some stability coming during the course of 2022 there. Then in addition, in terms of the materials that are required going forward in terms of batteries, again, we've made some recent announcements in terms of some of the ventures and infrastructures that we're putting in place to ensure that we can secure the right levels of supply to enable and support the transition as we need to. And at this particular point in time, there is absolutely no delays to our EV platforms in terms of rollout schedule. Indeed, I mentioned earlier that we're looking to pull the Lyric ahead by 9 months versus the original plan. So we will start producing that vehicle in March of 2022.
As Carol mentioned, you've been pretty much at General Motors for pretty much your whole career, right?
That's correct. 32 years in total.
Well, contextualize the shift to electric vehicles for us, and how big of a shift that's happening inside General Motors and inside Cadillac right now. Is this the biggest shift you've seen during your entire career?
I would say so. 32 years is a long time, and I think I would say to somebody that there's been more changes in the automotive industry in the last 5 years than there were in the 27 years that I'd experienced before that, and there'll be more changes in the next 2 years than there's been in the last 5 years. So the pace of change is absolutely dramatic at the moment, and this is no doubt, in my mind, the biggest shift that we will have seen in my period in the automotive industry.
It's interesting. What, as we move through this shift, what is it that I guess is the major risk to it progressing as you hope when you look at your timeline? And as you said, you moved it up for the Lyric. But what is the biggest risk to all of this?
Yeah, I think one of the challenges that you've got, I'm not sure if I describe it as a risk, is the pace of change and the rate of adoption, the rate of infrastructure, the range anxiety, customers' ability to be able to charge, etc. So I think there's a number of elements that piece together in terms of the jigsaw, and I wouldn't say that it's a risk overall in terms of the change. I would say it's a timing impact in terms of how aggressive is the adoption rate of EVs going to be. So I think it's more in terms of a question as to when rather than if.
Well, you know what, Rory, one thing I do think about, and there's something to be said like, oh, wait, my brother just got an EV, right? And you start to see it and you understand it. I do wonder what's the tipping point ultimately. Is it that all of a sudden you see, I mean, I've certainly seen a lot more EVs on the road than I have in a long time. I felt like I used to go to California and I'd see a fair amount, but now I'm seeing them, I feel like, all over the place, and there's a variety. But what do you feel like will be that ultimate tipping point for, do we need the governments to continue to give some kind of, tax incentive or tax break, or what is it?
Yeah, I think, again, I don't think it's one thing that's going to do the tipping point. I think you're absolutely spot on. Seeing other people in the vehicles, hearing other people's experiences in terms of the vehicles, look at the penetrations of EVs over in California. Tax credits are obviously something that will help facilitate in terms of being a tipping point for some. Infrastructure will help in terms of being a tipping point for some. And I think it's a culmination of all these factors. And then it's just really a question as to the rate of momentum and the rate of change.
So I'm just trying to think about the rate of change and how fitting that into the context of what we think about when it comes to the environment. Is it happening fast enough?
Certainly from our perspective, from a Cadillac point of view, from a selfish perspective, I would like it to happen very aggressively, and that's part of the reason that we're thinking about other things that we can do to support. So as an example, I mentioned, the week before last, we're doing an agreement with our dealer partners in terms of how we can get more charging out in the local communities, etc. So we have a number of things that we're doing to sort of act as a catalyst to try to help support that change and that growth in momentum.
Rory, what is the role of dealers? I mean, Tesla's obviously done it differently. You recently, I think, told Reuters that GM expects to have only 560 dealerships by the end of the year. That's a 40% drop from 3 years ago. What's the role of dealers? Does it change? And do they need to be all in on EVs as well in order for this to make sense for you guys?
Yeah, I think that's a great question. And yes, they need to be all in on EVs. If you go back 3 years ago now, we had close to 900 Cadillac dealers in the US. By the end of this year, we'll be down to 566 dealers. So it'll be about a 36% reduction. And I guess the reason for that was working with our dealer partners, explaining the future, explaining the changes in terms of customer requirements, explaining the investment that's required, etc. And, on the basis of that, we've rationalized our dealer network. We think that we've got a great footprint of dealers, which means that customers should be able to get top-level service wherever they are in the U.S. But absolutely, our dealer partners need to be all in, and we see our dealer partners as a competitive advantage.
Roy, back to where we started, Carol's question. Is there a chance that we could see an all-electric portfolio before 2030?
Oh, that's a leading question and not one that I'm going to give anything away on this particular point in time. But I would give you just a snippet of encouragement in terms of that. I mentioned earlier that 2030 is when we will be selling sort of the last of the ICE variants. So we will have a significant proportion of the portfolio that is EV available in advance of that timescale.
And I'm guessing a little competition in the industry will keep everybody on their toes. Rory, thank you so much. We so enjoyed this. Be well. Have a good, happy and healthy holiday season. And hopefully we can check in with you again on the other side or early in the new year. That would be really great. Rory Harvey, he's Global Vice President of Cadillac, on the phone in New York.
Well, let's head to Washington, D.C. Joe Matthew is standing by. Joe, what's coming up on Sound On?
Well, I'll tell you, we're trying to figure out in real time exactly what in the world is happening on Capitol Hill and whether the government's going to shut down tomorrow night. Are you guys taking odds on this?
Are you kidding me?
Not kidding.
All
now. This
over
is
again?
For real. I mean, this came out of nowhere about 24 hours ago. This group of Republicans in the Senate upset about mandates. We'll try to put it together for you, but the House is voting as we speak. Then it goes to the Senate, which we don't know what happens after that.
Wouldn't it be nice to just have a calm day? Nothing happens?
That's what I'm saying.
Just one. All right, Joe, have a good show. Joe Matthew, of course, host of Sound On, always busy. For Tim Stenevec, I'm Carol Master, and from the whole Bloomberg Businessweek team, have a good evening.